First question number 5. See in question 5 what you have to answer. Examine whether TDS provisions would be attracted in the following case. So see, if the tone of the question is TDS provision would be attracted or not, make sure you write the answer in that same tone. Means your tone should be TDS provision shall be attracted, not attracted, attracted, not attracted. But you don't have to just answer attracted, not attracted. You also have to give the reason with this section. And here also they have specifically asked under which section. So you have to make sure that section is written. And also you have to specify the rate. See, are you noticing? I am noticing what is asked in the question properly. Because if you don't see what is asked in the question and if you answer in some different way, you will not get sufficient marks. If you want full marks, read what is asked in the question. So see in the first point, ICICI Bank makes payment of 44,000 to Mr. Naresh for fees for professional service and 43,000 to him for technical service. See, there are two payments. One payment is for professional service, another payment is for technical service. For professional as well as technical service, section is same, 194J. But the threshold limit should be checked separately. Because in 194J, for per turner for each item it is 50,000. So you have to check for each item separately. So see, for professional service the amount was 44,000. It doesn't exceed 50,000. So TDS is not attracted. Even in technical service if you see individually it is not exceeding 50,000. So TDS is not attracted. So your answer should be, although the transaction is covered under section 194J, but TDS shall not be attracted because under 194J TDS is attracted if the payment exceeds 50,000 each for professional as well as technical service. Then second point, Mr. Samrat, salaried individual pays rent to Nasir. See, whenever the question talks about rent, there are two sections which should come to your mind, 194I and 194IB. And how to decide which section you will apply? Depends upon the payer. If big people are paying rent, then 194I. If small people are paying rent, small people means small individual HF, then IB. So you have to check the payer. So who is paying the rent? Samrat, the salaried individual. Salaried individual means small individual HUF. You know what is the meaning of small individual HUF? Individual HUF who doesn't have business, or even if he has business, his turnover in the preceding financial year did not exceed 1 CR. And if he is a professional, gross receipt did not exceed 50 lakhs. So here he is a salaried person. So salaried people are always called small individual HUF. And when small individual HUF pays rent, TDS is under 194 IB. But 194 IB is attracted only for immovable property. Here this rent is for what? Nothing is given, so we can assume it is for immovable property. And the amount is also more than 50,000 per month. So TDS shall be attracted. And what will be the rate of TDS? In the question they have asked, specify the rate. So what will be the rate of TDS under 194 IB? Under 194 IB it is always 2%. Then on 25th August 25, Rampal purchased a house property in Hyderabad and rural agriculture land. Means he has purchased two things, house property and rural agriculture land. House is for 74 lakhs, rural agriculture land is for 22 lakhs. And they have given his turnover in the preceding financial year. You know, turnover of preceding financial year is useful when you have to decide small individual HUF, and that you have to decide only in 194 Rachis. And this section is not from 194 Rachis. This is purchase of immovable property 194 IA. Okay. And here you have to see per transaction 50 lakhs or more. Per transaction. So there are two transactions. One is of house, other is of agriculture land. So house transaction, if you see it is 74 lakhs greater than or equal to 50 lakhs. So TDS will apply at the rate of 1%. But for rural agriculture land, TDS doesn't attract because sale of rural agriculture land is exempt from capital gains, and anything exempt, TDS is never applicable. Plus, there is one more reason, the transaction is anyways not crossing 50 lakhs, it's less than 50 lakhs. But even if it would have been more than equal to 50 lakhs, on rural agriculture land, there is no TDS. Only on purchase of house, TDS will apply at the rate of 1%. You have to mention the rate of 1%. Then East Bengal Club, a renowned football club, engaged Mr. Raghu as a coach. See, for payment to coach, you should remember SUPACE. Remember SUPACE? In SUPACE, there were 3 C's, coach, commentator, etc. These are called professionals for the purpose of TDS. And professional service TDS is under 194J, provided the threshold is more than 50,000. Here it is more than 50,000. So 194J shall be attracted. But see, be careful. 194J is from the family of Rachis. Whenever Rachis section comes, make sure you verify the payer. If by chance small individual HUF, TDS will not apply. So do you agree this is from Rachis? It is from Rachis. So you have to check the payer. The payer is East Bengal Club. So it's not an individual HUF. If it would have been some individual HUF and small individual HUF, then TDS will not apply. But did you think about the fact that it is a Rachis point? Whenever you come across a point of Rachis, you always have to check small individual HUF. But here anyways, the pair is not individual HUF, it's a club. So TDS will apply. Then next point, Jagdeep, an individual carrying on retail business with a turnover of 2.8 crores in the previous year 24-25, means the last financial year, paid 7 lakhs to a contractor for repairs of residential house. See, whenever you make payment to a contractor, it reminds you of works contract. Now in works contract, be careful, there are 2 sections. One is the main section 194C, another is 194M, the parallel section. So how to decide 194C will apply or 194M? 194M applies when works contract payment is done by small individual HUF, or even if big individual HUF, it is a personal transaction. Then 194M. Okay. So here, looking at the word repairs of residential house, what comes to your mind? It is a personal transaction. And personal transaction, 194C will not apply. Because if you remember in Rachi's theory, I told you that 194C and J personal transactions are exempt. But if you are exempt under Rachi's, you will be caught in 194M. So here 194M will apply because the transaction is personal. But in 194M, payment should be more than 50 lakhs. Here the payment is not more than 50 lakhs. So TDS will not apply. And what was the use of turnover of last year? Turnover of last year is to decide whether he is a small individual or big. So this shows that he is a big individual and making a personal transaction. If you remember in last lecture I told you, whenever, see this, big individual makes personal transaction, our question is precisely on big individual making personal transaction of works contract. So 194M was applicable, but since it did not cross 50 lakhs, TDS will not apply in our question. Then point number 6, Ketan, wholesale trader whose turnover was 4 crores in previous year 24-25, paid 80 lakhs in Feb 26 to the contractor for reconstruction of his residential house. Again, residential house means it's a personal transaction. Okay, personal transaction. And personal transaction, they are exempt under 194C and J. And those who are exempt under 194 Rachi section, you are caught in 194M. But for 194M, what is the condition? Payment should be above 50 lakhs. So check what is the payment amount. It is 80 lakhs. So it is more than 50 lakhs. So 194M will apply. And what is the percentage? 2% TDS under 194M. So this will fit in 194M. Then Simpson, a salaried individual. The moment you see salaried individual means he is a small individual HUF. He paid 20 lakhs as a brokerage. So tell me, brokerage comes under which section? TD, Wakraf, CP, CD, Wakraf. There were 3 commissions. 194 DGH. 194D insurance commission, G lottery commission, H other commission. So this is other commission. And for other commission also there are two sections, main section H and there is a parallel section M. I hope you know for other commission also there are two sections. So 194H should be applied or 194M. It's very simple. 194M applies when it is a small individual HUF making payment of about 50 lakhs. So see here it is brokerage is paid by a salaried person. That means payment is made by small individual HUF. So you can figure out from here small individual HUF and commission means brokerage only. So now you have to check whether the payment is exceeding 50 lakhs. No, it's not exceeding 50 lakhs. If you see in the question, the payment was only 20 lakhs. So TDS will not apply. But I thought from which section angle? 194M. I didn't think 194H. Because under 194H only big people deduct TDS. And here he was a salaried person, so small individual HUF. So that's why I thought in lines of 194M. But TDS will not apply because the amount is not crossing 50 lakhs. Then point number 8. Mr. Khurana withdrew cash of 1.22 crores from Bank of Baroda. So tell me for cash withdrawal TDS is attracted under which section? 194N. And filer, not filer, nothing is given means assume he is a filer. And for people who are filers, the TDS is in excess of 1 crore. In excess of 1 crore, 2%. And 2% is of whole amount or excess amount? Excess amount. So what is the excess amount? 22 lakhs. So 2% or 22 lakhs will be the TDS under 194 N. Tell me what if the cash is withdrawn by a non-resident person? Same, because for cash withdrawal, if you remember what did I say? Whether the person withdrawing the cash is R, NR doesn't make any difference. Okay. Yes, generally when the receiver is NR, we say TDS under different section. But for cash withdrawal, even if the cash is received by R, NR, TDS is under same section. Then Abhishek withdrew cash of 1.3 crores from post office and he did not file return for preceding 5 years. So he is a non-filer. So TDS will be attracted under 194N according to a special threshold of 20 lakhs. So here out of 130 lakhs up to 20 lakhs TDS will not apply. And for the next 80 lakhs it will be 2%. And for the balance 30 lakhs it will be 5% TDS. These were the three categories, okay, up to 20, above 20, up to 1 CR and above 1 CR. Percentage is 2% and 5%, okay. Then Thomas Cook, foreign exchange dealer, withdrew cash. See, cash withdrawn by foreign currency dealer is exempt from TDS. No TDS if cash is withdrawn by foreign currency dealer. So here TDS will not be attracted. So this was question number 5. Then in question number 6, there were several points but only few points were given in homework. So first was in question 6, point number 2. See point number 2, those who have done the homework, you might have seen this question is on 194Q. Here we have purchased goods above 50 lakhs. Let's read and check. Aryan Limited, a domestic company having turnover of 12 crores in the financial year 24-25. 24-25 for our exam it is a preceding financial year. They purchased goods worth 85 lakhs excluding purchase return from Mr. Varun. So tell me, Aryan is the buyer of goods and Varun is the seller of goods and TDS is to be deducted by the buyer of the goods. So here who is the buyer? Aryan. So Aryan will have to deduct TDS provided he purchases more than 50 lakhs from single person. See that 50 lakhs is from single person. Anyways, all TDS thresholds we have to check single person to single person, person to person. Only in case of immovable property, that 50 lakhs or more is property wise. Otherwise, everywhere we have to think person to person. So see here the purchase of good is amounting to more than 50 lakhs. Plus there is a condition in 194Q. Buyer's turnover in the preceding financial year should be more than 10 crores. Here it is more than 10 crores, it is 12 crores. So TDS will apply, no question about that. But see, they have given some sentence here, Varun is a resident firm. Tell me what difference it makes whether he is a resident or not. See here, Aryan is the buyer, Varun is the seller, and seller is a person who receives the money. And you know, whenever receiver is NR, TDS under different section. But thank God here the receiver is R. How do I know it's written? They are given the residential status of Varun. See, since it is given, I have to explain the relevance of this. Because Varun is a resident, that means good. The receiver is R. And only when the receiver is R, we have to use knowledge of the section which I am explaining these days. Because if the receiver is NR, you have to use knowledge of different section which I have not taught yet. Those different section will come in a different topic only, taxation of NR. Anyways, here TDS will come under 194Q. Now see, they have given 4 transactions of purchase. Total of all is exceeding 50 lakhs. But all purchase did not happen on a single day, it happened on different days. Actually, there were 4 days when we purchased the goods. But anyways, our rule of 50 lakhs is aggregate of the financial year. All the threshold limits are aggregate of the financial year. So tell me date wise. On 25th May, the transaction was of 30 lakhs. So on this day, I will not deduct TDS. I will deduct TDS only when the purchase crosses 50 lakhs. So here TDS will not apply. Okay. Then next purchase was on 20th June. 25 lakhs. Now I have to aggregate the financial year. Previous purchase was 30, now it is 25, so it has become 55 lakhs. So now TDS will apply because 55 lakhs is more than 50 lakhs. But it will come only on excess. 55 lakhs minus 50, only on 5 lakhs 0.1% will apply. TDS is only on the excess over here, okay. Then there is one more purchase of 20 lakhs. But in this purchase there was some defective goods which we returned. But return happens later. TDS is to be cut on purchase. So while purchasing, I did not know that I am going to return the goods. So at the time of purchase, I will deduct the TDS on the whole purchase. But the goods which are returned, I will adjust in the subsequent purchase. Means in subsequent purchase, I will net the purchase return and deduct the TDS on the net amount. In subsequent purchase. Why in subsequent? Because at the time of this purchase, I didn't know that I am going to return the goods. See, returning the goods you think later on. But purchase happens first. So on 20 lakhs, TDS will entirely come. But our mind knows that in this purchase of 20 lakhs, there was some defective goods which we have returned. So that will adjust in the next purchase. This was the main point of the question. See, before I started discussing, I knew that most of the students might have done this question perfectly right. Only thing which I was worried that how will you deal with purchase return, because this was a new unique point. So just keep in mind, whenever there is a purchase return, you will give the effect of that in the next purchase. Means in the next purchase, net it off and take the TDS on the net amount. But tell me, on 20 lakhs, you will take TDS on net or full 20 lakhs? Full 20 lakhs. Now TDS will come because we already crossed 50 lakhs threshold. Then in 20 lakhs, what was the returned amount? 5 lakhs. This I will adjust in the next purchase. Our next purchase is of 10 lakhs. So from 10 lakhs, you subtract the purchase return. So 10 minus 5, net purchase is 5 lakhs. On 5 lakhs, TDS will come at the rate of 0.1%. So again here TDS will come. But TDS will come on net amount. Net means 10 lakhs minus purchase return. Okay. So this was question number 2. See here I have shown the whole working. First transaction no TDS because we didn't cross 50 lakhs. Then TDS, but TDS only on the excess. And just see, the last point was important. In the last purchase, you are netted off the purchase return. Okay. You can write somewhere, purchase return should be adjusted in the subsequent purchase. Immediate next purchase you have to adjust. Anyways, I have highlighted, see, you can see here with red font. Purchase return adjusted next purchase. It's already highlighted. You can just put a star mark so that your attention is drawn to this point. So this was in question number 6, point number 2. Then in question number 6, point number 3 was also homework. See, in point 3, again it was purchase of goods transaction. See, what was given? XYZ Limited incorporated on 1st April 25 for trading goods. Its turnover for previous year 25-26 is 12 crores. It purchased goods from Messrs. Y Trade. So tell me here, who is the party? XYZ is the buyer of the goods. And who is the seller? Y Trade Limited. And TDS is to be complied by the purchaser of the goods. But what is the condition? Purchase should be more than 50 lakhs. And buyer's turnover in the preceding financial year should be more than 10 crores. But in this question, the buyer XYZ is newly formed in the current year only. It does not have any preceding financial year. So that means if you ask what was your turnover in the preceding financial year, 0. See, turnover of preceding financial year will exist when the entity was existing. But the entity itself was not existing in the preceding year. So how can it have a turnover in the preceding year? So since the condition of preceding year's turnover exceeding 10 crores is not satisfied, TDS will not apply. Question was straightforward. TDS will not apply. Although the total purchase, if you see, the total purchase is exceeding 50 lakhs. We have made purchase of more than 50 lakhs. But because we were incorporated in this financial year only, we don't have preceding year's turnover. So accordingly, that 10 crores turnover of preceding year, that condition is not fulfilled. So TDS doesn't apply. So this was question number 3. Then next was question number 7. See, in this question, I will explain the story of this question with the help of a drawing, so that it becomes an easy communication between us. Look at the drawing. Look. Can you see the drawing? See. In this question, what they are saying? Deere and Company, Lion and Company, there are two companies. What is the business of Deere and Company? To make furnitures. And furnitures can be dining table, chairs, sofa, etc. anything. So Deere is into the business of making furniture. But you know, furniture also includes chair. And chair is mainly made up of wood. But in every chair there is a cushion. So that cushion, Deere doesn't manufacture on its own. It has given the contract to Lion and Company. And what is the job of Lion and Company? It will manufacture cushion which is used for the chair. See, when you sit on the chair, there is a cushion, correct? But that cushion, Deere itself is not manufacturing. See, that wooden work, that main structure of the chair with the wood, all that is done by Deere. But that cushion part, they are getting it manufactured from third party, Lion and Company. But you know, whenever you get the product manufactured from someone, it will be works contract provided two conditions are satisfied. If you remember, I had explained this point. Look here. I will show you my chart. See, whenever you get goods manufactured from someone, what is the rule? If it is our material plus our specification, if both the conditions are satisfied, then only it's a works contract. What are the two conditions? The raw material for the product should be supplied by us, either by us or our relative. And the specification should also be provided by us. If both the conditions are satisfied, then we call it a works contract, then TDS under 194C. But you know, in this question, what is happening? Cushion is manufactured by Lion, but the raw material, what raw material required for cushion? You require sponge, you might require cotton, whatever, depends upon what you are using to make the cushion. So whatever raw material is required, it can be a fabric also, fabric over the cushion. That material Lion has purchased from outside. We didn't supply the material. Material was purchased by Lion from outside. So since we didn't supply the material, it will not qualify as a job work and this TDS will not apply. See, specification is ours. Tell me, how do I know it is our specification? Because see, chairs I am manufacturing. See, I am dear. Chair is manufactured by me, so I know the size of the chair, whether the chair is big or small. So it is implied that I will give a specification that I want cushion of this size or that size or whatever. Because mainly chairs are manufactured by me. So specification obviously I will give. But for the cushion, the raw material required, I have not given. Tell me, how do I know by reading the sum that I have not supplied the material? See the language of the question. Read. Subcontractor Lion, read this. Procured the raw material for production of cushions. So procured means it purchased the raw material for production of cushions. But from where? Here the problem is silent. Okay. See, they have clearly given Lion and Company has procured the raw material for production of cushion. But from where? Have they said that raw material was given by Deere only? It's not given. So, and procured is a general term. Procured means procured from the open market. So, since the raw material, look at this, my drawing. Since the raw material was procured from the open market, that means that condition is not satisfied. See, always in job work, you have to check two things. Which two things? Material as well as specification, both should be supplied by me. Your specification I am supplying, but material I am not supplying. And this is the interpretation. A student can argue, sir, how can we say that material we have not provided? See, just because our condition says material we should provide, don't get biased that it should be like this. Take the question in an independent manner. Independent language says what? Lion has procured the material. But from where? If the problem is silent, we can assume they have procured the material from some outside place. And when the job worker acquires the raw material from some outside place, it will not qualify as a works contract. This is ICAI question. Still, if a student argues, it is better you can write a note. By chance, if a student writes a note, assuming this raw material were procured by Lion from Deere only, then it's a job work subject to works contract TDS. If you want, you can write a note, and as per my opinion, you should get right answer for that also. But institute's exam, when this question came, they have treated as material was procured from outside entity. That's why they didn't treat it as a works contract, and accordingly ICAI answer is TDS will not apply. But still I advise you, you can write a note if you want, in case you have assumed that material is taken from Deere only. Then, in short, TDS will apply or not? According to my assumption, TDS will not apply because the material is procured from outside. Tell me, by chance if I assume, answer this thing, can answer. By chance if I assume that material was also supplied by Deere, means Lion purchased the material from Deere only, then it's a works contract. Then see, then how is the bill of Lion? Lion will have made the bill like this: material 4 lakhs, labor 1.5 lakhs. How do I know the bill? Read this part of the question. Read the last line. In the last line it was given how the bill was: material 4 lakhs and labor 1.5, and TDS will not come on the material component. It will come only on the labor charges. But all that you should have thought when, if TDS becomes applicable. Institute assume what? TDS not applicable. Assuming the material was procured not from Deere, it was procured from outsider. I am just telling you, by chance if I assume that material was procured from Deere only, then TDS applies, and if it applies, it will not apply on the material component, it will apply on the labor charges. Okay. No, see, if Lion would have procured the material from Deere, you know what happens in real life? First, Lion will purchase the material by making the payment, and then in return it will bill it back to Deere. See, if Lion would have taken the material, Lion will not take free. Lion will literally buy the material. So there will be a buying transaction of material. And then with that material, when the cushion is supplied to the deer, a full bill will be provided with material and labor. That's what happens in the real life. In real life, this job worker, what they do? Even if they take the material from deer, they literally purchases. It becomes a purchase transaction. Lion purchasing material from deer. And that transaction gets over. And then another transaction is job worker will provide a bill including material labor. That's what happens in the real life. But in the job worker's bill, which includes material labor both, you will exclude the material component and TDS will apply on labor charges only. Okay. But anyway, this was an extra discussion. As per ICAI, they have given the answer straight, TDS not applicable. Because their assumption is Lion has procured the material from where? So we'll assume procured from outside world. This was question 7. Then question number 9. See, in question 9, this has happened. Look at the drawing. Look. There is one trust called study cart. And, sorry, I made some drawing error. Okay, fine. That's correct. Yeah. Study cart is a trust. It is organizing some education facilities for the general public. And who is the lecturer? Monty. Monty provides online lecture from foreign country. Mr. Monty is located somewhere in foreign country. Maybe assume Singapore, Dubai, etc. He is a non-resident. It is given in the question. And he provides online lecture. And for providing online lecture, he is getting lecture fees. See, this arrow means what? Who is making payment to whom? Study cart is making payment of lecture fees to Mr. Monty, who is the professor. Monty is a professor in Dubai, Singapore, some foreign country where he is a resident over there but not resident in India. So tell me, if you remember, I told you whenever you know that the receiver is a non-resident, TDS will come under different section. So tell me here, who is the receiver? Mr. Monty. The study card is making the payment for the online lectures. But who is the receiver? Monty. And receiver NR. TDS will not come under CD Vakraf CPs. It will come under different section. And what is the different section in the world of NR? 195 is a popular section. But here even 195 will not apply. Because for non-resident, income has to accrue in India. For a non-resident, only if the income accrues in India, he has to pay tax. And only when he has to pay tax, TDS is applicable, although under different section. I am still maintaining my stand that whenever the receiver is NR, TDS comes under different section. But TDS also comes when the transaction becomes taxable in India. And for a non-resident, income becomes taxable in India when? Only when the income accrues in India. See, this basic thing from CA Inter. See, one thing if you remember, I told for NR, all incomes are subject to TDS. See, if you remember, I had given you this chart. Look, for non-resident, all payments are subject to TDS. But all payments which become his income liable to be taxed in India. So if NR says my income is not liable only in India, that means it's not taxable only in India, then how can India deduct TDS? Correct? And in this question, same thing is happening. Monty's income is not arising in India. Tell me why. This also many students will not accept. What I am saying is correct, but you tell me why. What did I say? Monty's income is not accruing in India. See, generally student will think what? Sir, Monty is giving lectures to students of India who come to study card. See, study card is an institute kind of thing. Like I have my institute Prime Vision. So that way study card is kind of an institute where students come to learn. So students are learning in India and Monty is giving lectures to students in India. But still why did I say income is not arising in India? Because see, whenever someone earns business income, income is said to accrue in India only if the NR has a permanent base in India. There is one rule. This I will explain in section 9 later. Later on I will teach one section 9 which says for PGBP people, what is PGBP people? People having profits and gains from business. For businessman type people, income is said to accrue in India only if they have a permanent establishment in India. Now, since Monty is having PGBP type income, tell me why it is a PGBP type income? He is a lecturer. He is not employee of someone. He gives lecture as per his own terms. So, he is a professional or a businessman. And for a businessman, when income is said to arise in India, only if he has a place of business in India. And Monty doesn't have any place in India. In fact, he is giving lecture through Zoom. If he is visiting India at a physical place which is owned by him or rented by him, then we can say he has a place of business in India. But Monty doesn't have any place of business in India. In fact, he doesn't need, because his lectures are online. He can sit at Dubai and give lectures on Zoom. And giving lecture on Zoom doesn't require him to have a place of business in India. And since he doesn't have a place of business in India, income doesn't accrue in India. And if income doesn't accrue in India, it's not taxable in India. If not taxable in India, India cannot deduct TDS. So TDS will not come. See, firstly, from CD Vakra of CP angle, TDS will not apply, because CD Vakra of CP applies when the receiver is resident. So I went in a zone of different section. But NR's different section says what? Only if NR's income is arising in India, then only it will be subject to TDS. And here I proved Monty's income is not accruing in India because Monty doesn't have a fixed place of business in India. See, this point I was not expecting that you should know, because I have not yet explained you section 9. You know, there is one section 9 which I will teach in NR taxation. There you will come to know that how to figure out whether income has accrued in India or not. Right now also I just gave you small glimpse that for PGBP people, income is said to arise in India if they have a permanent establishment in India. This is just a rough knowledge I gave. Actually, you have a detailed explanation in section 9 which will come later. But see, here there is one more point. Pay attention. Right now, what did I say? For PGBP type income, when do you say it accrues in India? Repeat. Only if they have a place of business in India, or we can say permanent establishment in India. Okay, but that rule is for PGBP income. But for other incomes other than PGBP, like royalty income, interest income, fees for technical service, there are many other incomes other than PGBP. For other income, there is no condition of permanent establishment in India. You know, institute assumed other thing also. Institute gave alternative answer. If we assume that lecturing is not PGBP, then income is said to accrue in India. And then TDS will come under 195. They gave both the answers in ICAI paper. See, alternative one was what? If lecturing is assumed as PGBP, then income is said to arise in India only if Monty has a permanent establishment in India, and since it doesn't have permanent establishment in India, income is not accruing in India, TDS will not apply. This is answer 1. Alternative answer, if we assume that lecturing is not PGBP income, then income is said to arise in India because lecturing is done for Indian students. And if it is assumed that income is arising in India, then TDS will apply. Both the solution they are given. Tell me what is appropriate. Should lecturing be treated as PGBP income or not? Generally, it is PGBP income only. But, in some foreign country, there is a rule. Teaching is a technical service. Teaching is a technical service. And for technical services, we don't check whether they have a permanent establishment in India or not. To tax NR for PGBP type income, there is a condition of having permanent establishment. But to tax NR for other income like technical services, see, right now you will find little weird. How will we come to know all this? Because I have not taught section 9 in detail. Here in this question, purely you are requiring the knowledge of section 9. So right now you manage little bit, but don't trust me. Section 9 I will explain in detail later. So in some foreign countries, there is a rule. Teaching is a technical service. It is not a normal business. It's a special kind of service. And now you will say, but sir, that is the rule in some foreign country, na? See, when you are dealing with NR, foreign law is also kept in mind. Because with foreign countries, India makes double taxation avoidance agreements. With foreign countries, India makes double taxation avoidance agreement, and double taxation avoidance agreement between India and foreign country. In such agreement, we don't stick to Indian custom. We also respect the foreign custom. Anyways, all these things, whether double taxation I was talking right now or section 9, all this will come in the upcoming topic. Right now, main point is there are two alternative answers. See, I have written here. Alternative 1, that no income is accrued in India because it doesn't have a permanent establishment. Okay. And alternative answer is, if you treat teaching as a technical service. So for technical service, there is no requirement of having place of business in India. So income will be directly set to accrue in India and TDS will apply. So this was a good question, question number 9. See, in this question 6, precisely in my book, question 6 is compilation of past papers. Other question, some of the question I have created to test your concept. But question 6 is not my creation, it is compilation of past papers. All good points I have compiled together in question number 6. Then in question 6, point number 11 also was given as homework. See, in point 11, it's a simple transaction. Look, Soham has purchased a software, okay, from a vendor, software vendor, and it is a licensed software. So see, there is one rule. Whenever you purchase a licensed software, although you feel it's a software, but software is kind of you are getting a license. And for getting license, the transaction is royalty in nature. Whenever you get license from someone, the price you pay is royalty. See, license means what? Permission. Tell me, when do I need permission? When it is your creation. Like in direct tax, I make my own notes, I make my keyword. So it is my creation. If someone wants to use, they will require my permission and my charge will be royalty. See, what is the actual meaning of royalty? Royalty is a payment made for someone giving you the permission. And why do we require permission? Because it is someone else's creation. So see, here software is created by some other person. Okay. And we are getting a license to use the software. And see, here it is written along with all rights to use it. So when the software developer gives us the right to use it, so for that right, what we pay is in the nature of royalty. So what? Royalty means 194J. Partner director. So R for royalty, and for royalty TDS will come if it is more than 50,000, and here the amount is 80,000, more than 50,000. But wait, 194J is from the family of Rachis, and in Rachis, if the payer is small individual HUF, TDS will not apply. Here who is the payer? Mr. Soham. So they have not given the status of Soham, whether he is small or big. So we can write a note assuming Soham is a big individual HUF, TDS will apply. And alternatively, if you assume that Soham is small individual HUF, TDS will not apply. But small and big matters because 194J is from the family of Rachis. Tell me, here they had given resident. Who is resident? The software vendor. See, Soham is the payer and that software vendor is the receiver. And they are saying the receiver is resident. So it's good now. Only when the receiver is resident, we think in lines of CD, Vakraf, CP. By chance, if the receiver is NR, TDS comes under different section. So here they have clarified that receiver is a resident. So think in lines of CD, Vakraf, CP. And in CD, Vakraf, CP, it is Vakraf FF. F is fees for professional, technical, royalty, etc. So see, keep in mind whenever you purchase software with a licensed copy having all the rights to use it, so it is kind of a royalty payment. Then question number 12. X is a bookmaker and Mr. B is a punter. What do you mean by punter? The one who places the bet. Like in a horse race, the horses are running and we bet. Horse number 1, horse number 2, horse number 3, and the person who places the bet is called punter. And bookmaker is a person who takes the booking. Like see, for example, I am taking the booking and there are so many people betting. You are betting on horse 1, he is betting on horse 2, he is betting on horse 3. So you people are punter. And I am taking your booking, I am the bookmaker. Okay. Now, what happened? On 22nd September, Mr. B won 5,000 in horse race 1. Means in the first race, he got winnings of 5,000. And there was one more race where he won 8,000. And one more race where he lost 2,000. So tell me, in winnings, what is the rule? If it is horse race, we check 194 double B. Remember double B, Bhagam Bhag, horse race. So 194 double B we will check. And the threshold in winnings was more than 10,000. But is it aggregate of the financial year or per transaction? Per transaction. If you remember, I told you that at 3 places, the threshold is per transaction. Which 3 places? Winnings, compulsory acquisition, purchase of immovable property. There we don't see the aggregate of the financial year, we see transaction wise. So here if you go transaction wise, first transaction winnings was 5,000, it did not exceed 10,000, 10,000 is the threshold in winnings, so TDS will not apply. Then in second winnings it was 8,000, again it did not cross 10,000, so TDS will not apply. And loss is not subject to TDS, TDS is on winnings, okay. And did you see I am not aggregating, I am checking per transaction individually. Then question number 13. See, in question number 13, you know what is the story? Look at this. Look. Insurance company has made payment to the hospital. You know, whenever a person gets hospitalized, don't look at the question first, understand what I am trying to say. Whenever a person gets hospitalized and if he has a Mediclaim insurance, what benefit you get? You just go to the hospital, get the treatment done, you don't have to worry about the bill. Patient doesn't have to pay the bill. Who will pay the bill? Directly insurance company will pay the bill to the hospital. Yes, if it is cashless. Yes, if you have got Mediclaim which is not cashless, then what we have to do? First the patient has to pay the bill to the hospital and then patient will get the reimbursement from the insurance company. But what happens in cashless? Patient has to simply go to the hospital, get the treatment done, no need to pay the bill, hospital will directly get the bill from the insurance company. But you know, insurance company generally outsource the work to third parties. They are called TPAs. Because see, in a hospital there are hundreds of patients at a time. Do you agree? In a hospital there are hundreds of patients And for hundreds of patients, there are so many insurance companies. An insurance company doesn't get time to settle with hospital. So they outsource the work to third parties. So see here what has happened. Look here, look. There is one company, AKL Limited. It is a third party administrator of the insurance company. His insurance company will be some other company. AKL is what? AKL Limited is what? It is third party administrator. They are working on behalf of insurance company. Now, see, TPA settles the claim or insurance doesn't matter. Huh? Most important point is what when insurance company or its third party makes the payment to hospital, it's a payment for medical service. And medical service is from Mail Fit Company. Mail Fit Company is the keyword for professional service. In Mail Fit Company, what was M? Medical service. See, whether insurance company paid the amount to hospital or it was done by the third party administrator. See, third parties are kept with when the insurance company feels they are busy. So they outsource. But it is irrelevant for a student. What the student should notice, whether the insurance company has made the payment or the third party has made the payment. Payment by them to the hospital is for what? Medical service. Because the policy holder has availed some medical service in the hospital. And for that medical service, insurance company has to make the payment to hospital. And whenever the payment is towards medical services, it becomes payment for the professional services, which is there in the keyword of Mail Fit Company. That means 194J. 194J will come, provided the transaction is more than 50,000. Here it is more than 50,000, so TDS will apply under 194J. Tell me, what if the patient doesn't have insurance? What if the patient doesn't have Mediclaim insurance? Answer this. For example, I am the patient hospitalized. I don't have Mediclaim insurance. Then who will pay the bill? Then the patient has to pay the bill from his own pocket. But when patient makes the bill payment, TDS doesn't come. Because it is for personal service, personal transaction. See, for a patient, when he has to make the payment of hospital bill, it's a payment which is personal transaction. Is it personal or not? See, when we get hospitalized, it is our personal matter. So if patient had to pay the bill to hospital, although it's a payment for medical service, but then this point should come to your mind. Which point? Under 194 C and J, personal transaction not subject to TDS. But the moment you feel you are excluded from Rachis, you can be caught in 194M. So patient can be caught in 194M if patient makes huge payment to hospital, more than 50 lakhs. See, I am taking my question to a different zone only, but that is, all this thing is valid when patient himself had to make the payment and he has no insurance. So then it becomes a personal transaction for the patient, and accordingly we have to analyze. But here the question says what? It was, patient was insured. Insurance company is making the payment to the hospital. Then for insurance company, it's not a personal transaction. It's an official deal. So TDS will come under 194J. Then after question number 13, there was question number 14 in homework. In question number 14, the story is like this. Look. You know Star TV channel? So Star TV, they display some TV serials or episodes, etc. Now, there is one particular episode which Star TV wanted to get it shoot, and shooting was done in a studio, and the studio's name is Digitech. In the question, Digitech is a studio where there is a facility of camera, green screen, where shooting can be done. So Digitech is a place where shooting is done, and Star TV is a channel where the episode which is shot will be displayed on the TV. And here they have clearly given, Star TV has given the contents and the specification according to which shooting should be done. See, here it was given, Star TV has provided the storyline, content and specification. And according to the storyline, content and specification, shooting will be done in Digitech Studio. See, Digitech has to do the job of shooting, but according to the storyline, content specification given by Star TV. So this will remind you about works contract. Whenever someone is doing the work as per our requirement, it becomes works contract. Some student ask me the doubt, sir, where it comes in ABC JAL? The ABC JAL was just example. If you remember in my notes I have given etc. Don't always try to figure out in ABC JAL. Works contract means what? ABC JAL etc. So many things can come. The moment you see someone is doing the work as per our requirement, it's works contract. So TDS under 194C. But see, 194C means be careful, it is from the family of Rachis. And in Rachis, if the pair is small individual HUF, TDS will not come. But here the pair is Star TV. Not even individual HUF, so TDS will apply. Then question number 15. In question 15, the story is like this. Look at the story. I have made a drawing over here. Focus on the drawing. X Limited has sold natural gas to Hawaiian company. There are two companies given the question, X Limited and Hawaiian company. And what the transaction is, X Limited will sell gas to Hawaiian company. Okay, natural gas. Now see, the transaction is for sale of gas. And you know how the billing was done? Look, the bill was like this. Who will raise the bill? X Limited, because X Limited is selling gas. So X Limited, you know how it raised the bill? For the gas, some XYZ amount plus delivery charges, transportation charges. This way the bill was raised. Primarily the transaction is for sale of gas. But how the billing was done? In the bill, some amount was quoted for gas, price of gas, plus delivery charges. See, we also buy sometime product. So what seller does? Seller will charge the price of the product plus delivery charges. So here there was some delivery charges. So the question is, which TDS will apply? Many students, what they think? Delivery charges is transportation. And for transportation, works contract is there. See, for transportation, works contract section applies. Remember ABC JAL? In ABC, what was C? Carriage of goods and passenger. So transportation is there. But delivery charges, transportation included in the product price. You don't have to give importance to transportation. Main transaction is of sale of goods. And sale of goods, at the most it can come in 194Q. Remember 194Q? Purchase of goods. See, sale of goods, purchase of goods is one and the same. It is depending upon from whose point of view you are talking. So since primarily it is a transaction of goods purchase. So at the most TDS can come under 194Q. But some people argued, see, this has come from a real life case law. In real life, there was an argument that there was transportation charges in the bill and transportation is a works contract. See, transportation of works contract, but when it is an independent transport contract, like if I hire some truck and tempo drivers, I tell them to transport the goods as per my requirement. If it is an independent transport contract, then it is okay. See, here it is possible that XY Limited might have hired some transporter. For what? Transport the gas to Hawa. Then between XYZ and transporter, there can be works contract. You understood? At the most, if works contract comes, it can come when? If they say X Limited has given the transportation job to some third party. And that is also an assumption. Huh? See, generally X Limited itself might have transported. X Limited might have told its worker, take this gas and send it to Hawa. So if X Limited itself might have transported, then again no question of works contract. But if I assume X Limited has hired some transporter or third party and given the transport job, transport this to Hawa, then there can be works contract between X Limited and transporter. That also if some third party is involved. All this is not given, I am just talking all various possibilities. Here if I assume X Limited did not hire any transporter, it has told its worker only, take this gas and send it to Hawa. But our worker are doing the work, so we are charging delivery charges. And the delivery charges when included in the bill of sale of goods, it is primarily a transaction of sale of goods. And in sale of goods, the buyer will deduct TDS if the transaction is more than 50 lakhs. And here the transaction is 20 lakh 50,000 plus 2 lakhs. See, in purchase of goods, you have to see full bill price. You know that 50 lakhs rule, 194Q. 194Q, this thing, see. In 194Q, when you see that 50 lakhs, it is a full bill amount. In the bill, delivery charges are there, XYZ, blah, 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 incidental charges, full amount. Obviously, not including GST. GST will never count in the TDS. So, generally what happens when buyer has purchased the goods, so whatever amount is mentioned in the bill, full bill we have to see for 50 lakhs. So, tell me here what is the full bill amount? For gas, 20 lakh 50, delivery charges, 2 lakhs. So, what is the full bill amount? 22 lakh 50,000, which is not crossing 50 lakhs. So, 194Q will not apply. But in real life, when the case law happened, you know, they argued on transportation charges is subject to works contract. No ways. See, when transportation comes in sale of goods transaction, it is incidental charges. It becomes part of goods price only. See, even when we do the accounting, when you buy goods, delivery charges, it becomes part of purchase price of the goods only. No? So, conclusion is what? Whenever there is goods transaction, all delivery charges, transportation should not be seen separately. It's price of goods only. Transport hype you should create when? For works contract, ABC JAL, carriage of goods. When it's an independent transport contract, you hired some transporter to transport the goods as per your requirement. Then it's an independent transport contract subject to works contract, ABC JAL, C, carriage of goods. In short, here finally no TDS under 194Q and even 194C works contract is ruled out because transportation should not be given importance, it's a transaction of goods. Then what else? That's it. These were the homework questions. So we did all discussion of homework question. Now see what is the status of our chapter TDS. In TDS, we are supposed to do 3 things. Part 1 is done, part 2 is also done. Part 2 is done. Now what is the third part? General notes. General means these are common points applicable mostly in all sections. That's why I have written as general notes. Now see, in general notes, in all we have got 12 points. How many points? 12 points. In that, point number 1 and 2 are most important and lengthy points. Most important. Point 1 and 2. Okay. Now see, first point is what? When to deduct TDS. See, actually what I'll do, you know, point 1 and 2 I'll be doing parallelly. Because these 2 points cannot be explained separately. It has to be explained together. Which 2 points? When to deduct TDS and when to deposit. Tell me, what do you mean by deduct TDS? You know, many students do not know what is the meaning of deducting TDS. You know, people think what? Deduct TDS means if you are making payment of 100, give him 90. So, instead of 100, if I make payment of 90, it is deduct TDS. But that is a wrong concept. To deduct TDS means to create liability of TDS in the books. How it exactly happens, I will explain with the help of a journal entry. But right now, just take this definition very seriously. Because if this thing is not clear, many times in my communication, I will keep saying he didn't deduct TDS, he deducted, he didn't deduct, he deducted. You will not understand what's happening. So tell me exactly what do you mean by deducting TDS? To create a liability of TDS payable in the books of account. Means in the journal entry, imagine 2 TDS payable. If that thing comes in a journal entry, government is satisfied, yes, TDS has been deducted. Means basically you have to make a provision of TDS payable in the books. And when to deposit means when you actually make the payment. Okay. So see here, there is timing for creating the liability also, and there is a timing of when to actually deposit. So see here, first I will explain what is the timing to deduct TDS. Means when to create the liability in the books. Means when you enter into CD Vakraf CP transaction, if you enter into CD Vakraf CP transaction, when to record TDS liability. So see, the rule is like this. At the time when party's account is credited or actual payment whichever is earlier. This is the rule. Now what is the logic behind this rule? What does it exactly mean? I will explain with an example. But first by heart this. At the time when party's account is credited or actual payment whichever is earlier. Now see with example. Let me talk with example. Assume this classroom rent I have to pay to some Mr. R. Mr. R is the landlord of the property. And I am paying rent of say 100 to Mr. R. Now assume on 3rd June the rent became due. But I didn't have money to pay. So I requested the property owner, dear owner, I don't have money. It's okay, I pay the rent later. So he said, it's okay, no worry. I trust you, you pay the rent later. In short, what I am trying to say, the rent accrued. But I could not make the payment because I was not having money. In short, rent was paid or outstanding? Outstanding. So what is the journal entry for outstanding rent? Since the rent is accrued, you have to book the expense in the books of accounts. So rent account debit to party's account. In my example, assume Mr. R is the property owner to whom I am making the rent payment. And since I have not yet paid the amount, I have written the party's account. And then that happened on 3rd June. In the month of August, I was having good finance. I was having good amount of money, so I made the rent payment. And when you actually make the rent payment, entry is what? This liability will be reversed, R account debit to bank account. Now tell me, in this transaction what is happening? Party's account credited. In this transaction what is happening? Actual payment. Basically I wanted to create these two situations. Party's account credited, actual payment. Okay, so see here. Party's account credited on 3rd June. Actual payment on 25th August. Now we have to select whichever is earlier. So what is earlier? August or June? June. So on 3rd June I have to deduct TDS. See, this is a rule for when to deduct. So answer when to deduct. On 3rd June I have to deduct. Now tell me, deduct means what I have to do? I have to create liability of TDS. So see, I will cut 100 and I will make 90. This is called cutting. Don't we say TDS kata, TDS deducted. So see, are you getting the feeling of deducted? Mr. R was 100 and I deducted, I made it 90. And corresponding 10 will appear as TDS payable in my books, TDS liability. This is called TDS deducted. See, I have done here, look. I will not write Mr. R with 100. I will record Mr. R with what amount? 90. So what is the proper journal entry? Rent account debit to Mr. R 90. See, when you show Mr. R 90, that means you have deducted Mr. R. Okay. And to TDS payable 10 rupees. This is called TDS deducted. And this I should do this I should do when? On 3rd June only. Here if I do little bit delay, I will have to suffer the consequence. See, what are the consequences? That is my next point. let me not mix up right now. See, after I explain when to deduct, when to deposit, I will explain the consequences of the failure. So consequences of not following the rule I will discuss separately. Right now let's not mix it. Right now you just respect one rule, that precisely on 3rd June in my books TDS liability should appear. Wait, this amount will change now. Huh? If Mr. R is credited with 90, so on actual payment date Mr. R will be what? It will be 100 or 90? Obviously 90 it will be. So now what is the proper entry? R account debit to bank account 90. Okay, because TDS has been deducted at the time when party's account was created. Okay. Now, see 3rd June is June. Now next month by 7th of July, I have to deposit this TDS. See on 3rd June, it is standing like a liability. When you have to actually pay off? 7th of next month. 7th of next means next to which? Next to June. See, June has become the base when liability has occurred in my books. So take June month as the base and take the next month. After June, next is July. So by 7th of July, I have to deposit. So tell me, what will be the entry on 7th of July? This TDS payable account, liability will be cancelled and I will have to pay, so to bank account. TDS payable to bank account. See, in exam, they will not test your journal entry knowledge. I am explaining with journal entry so that our communication becomes very smooth. Because without journal entry, it becomes very complicated to understand. Okay. So tell me, here why did I show these two things in red color? Use of my red color has some intention. Tell me here what I am trying to say. TDS is deducted. And here to bank means deposited. So I explained when to deduct, when to deposit. So when to deduct, whichever is earlier. When to deposit, 7th of next month. Now tell me what is the logic of whichever is earlier? Why whichever is earlier? Because see what government says, businessman has generally a habit of deferring the payment. Like see, I am also carrying a business of coaching class. So generally I also have the tendency that many times advertisers bill has come or some printing bill has come and I have the tendency of I will make the payment, I will make the payment, I will make the payment. Generally businessmen do not make payment on the spot. They defer the payment. Government knows this. But you know what government says? You might have good relation with your party. You might defer the payment, your party doesn't mind. But we cannot wait. Your party is ready to wait. Like you are seeing rent, Mr. R is cooperating with me. It's okay, Shirish. You pay the rent later. It's okay. Because he has a good relation with Shirish. But government says we don't have good relation with anyone. We want TDS immediately. Mr. R might have given you the facility that Shirish, you pay the rent later, pay the rent later. So you pay him later. But our TDS will not be later. It is whichever is earlier. So that's why government has made a rule of whichever is earlier. Now see, in case it happens like this, before the rent accrues, I made advance payment. It might happen that I am having so much of money that I felt that I will pay future rent also in advance. So tell me, the rent which will accrue in future, if I make the payment in advance, then TDS will also come in advance. Because then what government says, when the party itself has got the money, so why will we wait? Because TDS is the portion of that amount only. When the party itself has got the amount, give the TDS to us also. In short, the rule is whichever is earlier. But see, whatever comes earlier, that month becomes a base. And after that, 7th of next month, you have to deposit the TDS. Okay, now try this question. Try this. What if this was 3rd March? Means my rent became due on 3rd March. But I deposited in August. March it became due. But when did I pay? Means I actually paid the rent in August. So now whichever is earlier is March. March has come first, then comes August. So March. So when will I deduct TDS? 3rd March. On 3rd March in my books TDS payable should come. But there is a rule. Whenever in the month of March TDS liability has occurred, you have to deposit by 30th of next month. Generally TDS should be deposited by 7th of next month, 7th of next month, 7th of next month. But if the liability has occurred in the month of March, then you have to deposit by 7th of next month or 30th of next month. 30th of next month. So what is the next month for March? April. So by 30th April you have to deposit. You know why? Because March is a month where every businessman is very busy. The businessman is already a busy man. And when the month of March comes, he becomes super busy. Because he has to close all the accounts, he has to do so many things. And here if government says, no, give our TDS fast, give our TDS fast, it doesn't sound good, na? So government is matured enough to understand that since businessman is busy in the month of March, we will not rush up. We are ready to wait till the end of next month. End of next month is April 30. In short, conclusion is what? If TDS payable appears in any regular month, April, May, June, July, August, September till Feb, then deposit by 7th of next month. But if TDS payable appears in the month of March, then that payable thing you have to make paid not by 7th of next month, by 30th April. So March is a special exception. See, here I have written, focus on this thing. Normally you have to deposit when? 7th of next month. But if TDS is created in the month of March, then 30th April you have to deposit. Okay. Now, see, I am explaining 2 points parallelly. Look which 2 points, when to deduct and when to deposit. Okay. Now see, in when to deduct there are 4 variations. How many variations? 4. This is a general protocol that we have to follow the rule of whichever is earlier. But now there are some exceptions. In these cases, TDS doesn't work according to whichever is earlier. It goes as per actual payment basis. Why I will tell you, means you know now what will be the change. Look, here what did I do in this entry? I selected out of the 2 dates the date which is early. But in some cases we don't go whichever is early. We see the actual payment. In the actual payment, when you write to bank, along with to bank you will write to TDS payable. We don't go by whichever is earlier. We go according to actual payment. Why I will tell you. But these are exceptions where you go according to actual payment, not whichever is earlier. You know where it is? SWCL. By heart the keyword. SWCL. S for salary. W for winnings. C for compulsory acquisition compensation. Another C, cash withdrawal. L for life insurance maturity proceeds of big premium policy. So these are exceptions where TDS is deducted on actual payment basis. What do you mean by TDS is deducted on actual payment basis? Deducted means you have to create the liability on actual payment basis. Why? See, your doubt should be what? So generally it is whichever is earlier, na? But here why not whichever is early? So see, here the thinking is what you know. What was the logic of whichever is earlier? Because government was thinking that businessman has the habit of making late payment. Businessman has general habit of making late payment. So you make late payment to your party, but we cannot wait so late. We want early. That was the mentality. Because businessman generally makes late payment. But here I will prove that businessman will not make late payment like salary. No businessman will make late payment of salary. See, I am also a businessman running a coaching class. I make sure salary of my full-time staff, I will make first payment to them. As soon as a new month starts, my first work every month is what you know, to pay salary to my staff. Even if my business goes in losses, I will first make sure to pay salary to my staff. You know why? Because they are full time coming in my office. And if I delay in payment of salary, they will stop coming to my office. So see, it is not just me. Every businessman in this world, his nature is what you know. He might postpone the bill of advertiser, printer, transporter. There he will delay the payment. But he will never delay payment of staff. So this government knows. That's why government is not in hurry. Which year is earlier, because government knows salary of staff will never be delayed. Exceptionally it can happen, but generally salary is paid on time. That's why government is not in rush of which year is earlier. Okay. So tell me, in this same example, if instead of rent, it was salary of Mr. R. Assume R is my employee and it was salary of Mr. R. And by chance it happened that on 3rd June, the salary became due, but I told my employee, I don't have money, which is a very rare thing. Staff salary, as I said, generally you will pay on the spot. But by chance if it happens that salary of Mr. R was paid in August, it was paid late, then what will happen? Will you do parties account credited, actual payment which is earlier, or you will select actual payment? You select actual payment. So tell me what change will happen in my journal entry. Rent account, instead of rent it will be salary account debit to R, and this thing, look at this TDS payable. This will come in which entry? Entry below. It will come here. In which entry? Entry of actual payment it will come. Obviously the amounts will change. Then what will be the amount in first entry? Salary account debit 100 to Mr. R 100, full 100. And when actual payment is made, R account debit 100 to bank to TDS payable. Don't focus on the amount, but point is this TDS payable will appear in the second journal entry. Okay. So this happens when? This happens whenever it is SWCL. S was salary. What is next alphabet? W. W winnings. Even in winnings, it is not possible that you will defer the payment. Like you have seen many game shows. Like Kaun Banega Karodpati. When Amitabh Bachchan is running that game show, immediately the winner gets the money. Means you will never find that winnings is booked as an expense and we give the winner after 2-3 months. In all winnings event, the winner will on the spot get the money. So here there is no chances of postponing. That's why government is not in rush. Even in winnings, government says it's okay. We don't want to do which is earlier. We will wait for the actual payment. And government knows at the back of the mind actual payment will be done immediately. Then what is next? Alphabet C. C for compulsory acquisition. You know, in compulsory acquisition, compensation is generally paid late by the government. Compulsory acquisition compensation, government generally gives you on time or late. They give late. But the receiver also shows capital gain on receipt basis. You forgot capital gain, huh? You don't remember the time spent by me with you? In capital gain, I explained. Whenever there is a compulsory acquisition, the capital gainer has to show the tax on receipt basis. So when the capital gainer pays the tax on receipt basis, the payer will also deduct the tax on payment basis. Matching concept. See, this is the capital gainer and this is the government who is making the payment. The person who has made the capital gain, he is also taxed on receipt basis. Na? So the payer of the compensation will also deduct TDS on payment basis. Just to match the thing, matching concept. What is second C? Cash withdrawal. See, in cash withdrawal, anyway, this doesn't suit. See, cash withdrawal, is it like this? That first cash which was to be withdrawn, it will remain outstanding. Then it is actually withdrawn. See, cash withdrawn becomes withdrawn when you actually withdraw. So whenever you actually withdraw, TDS will come that time. So anyways, for cash withdrawal, this will not even suit. This suits when parties account credited actual payment, when there is some billing. But cash withdrawal is not a billing, it is withdrawal from the bank. Then what is L? Life insurance claim. The life insurance policy, if it matures and if it is a big premium policy, there is a TDS. Here also TDS comes on actual payment. Because if LIC has settled your claim late, it is genuine. Because generally LIC will not unnecessarily delay your claim. As soon as your policy matures, you will get the maturity proceeds. If there is some little bit delay, it is understandable. So government also understands. That's why government is not in rush for the TDS in LIC claims. So LIC claims also, whenever the claim is actually paid, actual payment basis TDS will come. See, I am trying to justify each point. Conclusion, you have to remember SWCL TDS comes on whichever is earlier basis or actual payment basis. Actual payment basis, and best way to remember is in our journal entry TDS payable will get switched to the second entry. Okay. But see, here the rule of depositing is same. See, in SWCL what is special? Liability creation comes in the actual payment entry. It will come here. So accordingly the base month will become August. So depositing by 7th September. See, you don't have to see the exact date, 25th or 23rd or 1st August. See, if TDS liability comes in actual payment entry, our base month will become August. So when to deposit? By 7th of September. Means there is no exception in depositing. Only thing is, in SWCL, the base month becomes the actual payment month. So accordingly 7th of next month will be decided. Then one special point under 194 IB. First tell me what is 194 IB. Small individual HUF, they are also required to deduct TDS if it is rent of immovable property. What was the logic I gave? Immovable property is a main source of rental income, and there are many people who do not have any job or business. They are surviving on rent, and it is which rent? Immovable property. And what if they doesn't pay tax? That's why government is afraid. That's why what government said, even if immovable property rent is paid by small individual HUF, TDS should come. We know small individual, it's not good to give them compliance burden, but immovable property rent is a major source of revenue for many people. Many people are surviving on rental income only. What if they don't pay tax? That's why TDS was started. Remember the logic? But you know, don't forget, under 194 IB, government is torturing a small individual HUF. In IB, who pays the rent? Small individual HUF. Means even if I am small, I am required to deduct TDS, which is one way unfair or not? Why unfair? Because the TDS is meant for big businessman. But for a small businessman, small individual HUF, giving them TDS compliance is not good. But still government has given the compliance burden under 194 IB. So that's why here there is some special concession. You know what law says? That under 194 IB, you don't have to deduct TDS every month. Deduct TDS once only at the end of the year. You didn't feel the relief kind of thing. You know, generally rent is paid every month, month to month. And if you pay rent every month, TDS is generally attracted every month. But for 194 IB, there is a special concession that when every month's rent is paid, you don't have to deduct TDS every month. Generally tell me, if I pay rent every month, I was supposed to deduct TDS every month, na? So in a year there are 12 months. So I was supposed to deduct TDS 12 times and deposit also 12 times. So doing the work 12 times, it is bothersome. But government has a soft corner for people under 194 IB. Why soft corner? Because they are small people doing TDS compliance. So for them there is a special relief that no need to worry about TDS throughout the year. Let the year get over. And when the month of March comes, that time you take the tension of TDS. TDS is a tension, na? You have to create the liability in the books, then you have to deposit on time. It's a tension, but that tension will not arise throughout the year. It will arise at the end of the year. So try this example, try. Assume my rent is 1 lakh per month and it is paid by small. Tell me, to create 194 IB, what is the condition? Payer should be small, individual HUF, and rent should be of immovable property. So assume in my example it is small individual HUF paying immovable property rent, and the rent is 1 lakh per month, which is more than 50,000 per month. 50,000 was the threshold, right? TDS is what rate? 2%. Under 194 IB, rate of TDS is what? 2%. So just see, April month, what will be the journal entry? Rent account debit to bank. See, such a great relief. I paid the rent without botheration of TDS. See, same way May, June, July, throughout the year, no tension of TDS. But at the end of the year, I have to take the tension of TDS. Now what I will do? In the end of the year, I have to deduct TDS. But now again there is a timing. When party's account is credited with the rent of March month, and when rent of March month is actually paid, whichever is earlier. See, the concept of whichever is earlier is there. See this. But do you have to do whichever is earlier every month, or only once? Only once. See, you are paying, don't forget, you are paying rent 12 times. But you don't have to do this whichever is earlier 12 times. Only one time. Which time? Last month. See what I have written. Parties account credited with the rent of last month. And that is only once in a year. And actual payment of the rent of last month. So here a student should feel, although I am paying rent 12 times, but I don't have to do this whichever is earlier 12 times, only one time. So now that time has come, March. So assume rent of March I kept it outstanding. Assume I am purposely keeping outstanding so that I can create two dates. Parties account credited, actual payment are two different dates. Just to show the importance of which is earlier. I hope you understand my feeling. See, if I make on the spot payment, then there is no difference between the two dates. Which two dates? Parties account credited, actual payment. So just to create the importance, I am assuming rent is outstanding of March. So outstanding rent, what is the entry? Rent to parties account. And actual payment was done later. So what is the rule? Whichever is earlier. So what is coming earlier? Parties account credited. So now TDS should come. Means in this entry I have to write to TDS payable. Tell me what will be the amount of TDS? Calculate. What is the rent of 12 months? 12 lakhs. 2% comes to 24,000. So TDS will be 24,000. And parties account, I will not write 1 lakh. I will credit the party with 76,000. This is a refined journal entry. So this shows I have done TDS compliance in the month of March. But see, creating the liability is called TDS deducted. Deducted. Now you have to deposit also. When to deposit? Whenever in the month of March TDS liability appears. You don't have to deposit by 7th of next month. You have to deposit by 30th of next month. So what is 30th of next month? 30th April. After March, by 30th April, you have to deposit the TDS. And let's assume I made the payment to the party in the month of July. See, party I will pay in July. But TDS I should deposit when? 30th April. See, party is so cooperative that even if I make the payment after 10 months, he is ready. But government is not cooperative. Government says in March you created liability. Latest you have to deposit by 30th April. See, this entry shows when did I make the payment to the party. And obviously party I will pay 76,000. Okay. Now one more thing. Right now what did I say? TDS provision is to be done in the month of March. But you know, sometimes the property is vacated in the middle of the year. Till March, the property is not with me only. See, if the property is with me only, I am using on rent for the whole year, then I will do TDS compliance in the month of March. But now imagine this property I vacated in the month of November. This property I vacated in the month of November. So what will happen? After November, my rent will stop. So tell me then, what is the last month of my tenancy? November is the last month. After that, I vacated the property. So since November is the last month of tenancy, TDS compliance will be done in the month of November. So can you pass a journal entry for November month? Please pass the entry for November. Rent account debit 1 lakh. To parties account. Let's assume November rent is outstanding. So rent account debit 1 lakh. November month. To parties account how much? And to TDS payable how much? Tell me how much. April to November, how many months are there? 8 months. From April to November, months are 8, na? So your rent will be 1 lakh into 8 months, 8 lakhs. 8 lakhs 2%, 16,000. So what will be the journal entry in November? Rent account debit 1 lakh. To parties account 84,000. To TDS payable 16,000. Now why 16,000? Because rent of 8 months only subject to TDS. Huh? Okay, now answer. Don't take this for granted. Huh? So November month, what is the entry? Repeat. Rent account debit 1 lakh to parties account 84 to TDS payable 16,000. TDS payable 16,000. When I have to deposit? See, November I have created a liability to TDS payable. So when should I deposit? You will say 7th of next month. Wrong. 30th of next month. Under 194 IB, 7th of next month is not applicable ever. It's always 30th of next month. This is one more relief given by government to people under 194 IB. Because people under 194 IB are small individual HUF. Government doesn't want to trouble them. Tell me, if government says 7th of next month, it's a trouble for me. Because then I have to be on my toes. As soon as November gets over, 7th December I have to deposit. Government cannot torture a small poor individual. See, when I took the example of March, you didn't realize the importance, because March 1 TDS is anyways deposited by 30th April. But what I am trying to say now is, under 194 IB, even if TDS is deducted in the month of say November, December, etc., still the rule is not 7th of next month, it is 30th of next month. Technically, in the law they have not written 30th of next month. You know what law says? Within 30 days. Because 30th of next month technically becomes wrong. Because in some month there is no 30th. Like the month of Feb. Okay, if you understood answer, assume I vacated a property in Jan. In Jan I vacated a property. So tell me the journal entry. Rent account debit to party account to TDS payable. I don't want the amounts. Let it be. In the month of Jan, entry will be rent account debit to parties account to TDS payable. So TDS payable has come in the month of Jan. So when will you deposit? If I say 30th of next month, so I will wait for 30th of Feb. But in Feb there is no 30th. So 30th of next month, I casually said. What is the exact wordings in the law? Within 30 days from the end of the month. So if you end Jan, after that take 30 days. 28 days of Feb, 2 days of March. So by 2nd March I have to deposit. So see, although I might casually say 30th of next month, but please don't mind. Technically it's not 30th of next month. What is the proper language? Within 30 days from the end of the month when TDS is deducted. When TDS liability is created. From the end of that month within 30 days. So tell me, what are the two special benefits under 194 IB? Benefit number 1. Although you have to pay rent multiple times in a year, you don't have to comply TDS multiple times, you have to do it only once. that is in the month of March, and if the property is vacated in the middle of the year, you have to do it in the last month of the tenancy. This is first benefit. What is the second benefit? Generally, TDS is deposited by people by 7th of next month. But for such people, it is always 30th of next month. Whether that base month is March or any month, it's always 30th of next month. And why so special soft corner for IB people? Because IB is for people who are small individual HUF, that's why special relief. In fact, you know, this soft corner government also has for 194 IA, 194 M, 194 S. You know, the concept of soft corner is applicable in 4 sections. Soft corner means soft corner for what? Poor assessee, we have tortured him with TDS compliance. See, first you have to accept TDS compliance is meant for big people doing big business. They are expected to do TDS work. No? It's not meant for small people. But under these 4 sections, if you see, government has troubled people who should not be troubled ideally. Tell me, why did I say under IB, small individual HUF is there? Under IA, IA is for what? Purchase of house. It's our personal life transaction. See, buying a house is already a tension in my personal life. And on the top of that TDS, it's again a torture. See, I am telling in these 4 sections, government shouldn't have kept TDS. But still government has kept, so government is guilty about that. Tell me why I am saying in 194 IA also TDS should not have been kept. Because IA means, see, IA means you might be a rich person also. But buying a house is my personal life transaction, yaar. And in my personal life, government is troubling me of TDS. I don't like it. Even in 194M. What is 194M? Works contract, professional service, other commission, if paid by small individual HUF, or even if by big individual HUF in personal transaction, they are also troubled. In 194S, cryptocurrency, small individual HUF is also required to deduct TDS in cryptocurrency. For them, the threshold is 50,000. You forgot cryptocurrency section C. In 194S, even small individuals have to comply with TDS. Yes, for them there is a special threshold of 50,000, only above 50. But even they are troubled. So in short, see, there are 4 sections where government also feels unnecessary we are torturing small people. So which are those, tell me? See, first tell me, because then I will come to one main point. Under IB, IA, M and S of small individual HUF. Your government has got no guilt. Because other means they are big people. Guilt comes here. So wherever government is guilty, their 7th of next month is not applicable. 30th of next month. This is the main bottom line which I wanted to convey. So what is the final point I said? Whenever government feels guilty, guilty of what? Of unnecessary bothering for TDS compliance. In all those sections, government has kept the rule of not 7th of next month, it is 30th of next month. So if you understood answer, if I purchase immovable property 50 lakhs or more, 194 IA, so I purchase the house property in the month of August. Pass the journal entry, house property account debit to bank account to TDS payable. 1% TDS house property purchase in the month of August. So when will I deposit TDS? 30th September. In short, 7th of next month doesn't apply to IB, IA, 194M and 194S if it is a purchase of cryptocurrency by small individual HUF. See, that's what I've written here. Look at this. Look, IA, IB, M and S. But S means which type of S? Virtual digital asset if purchased by small individual HUF. So if these 4 cases you see in the question, what will be your answer? deposit the TDS by 30th of next month. Technically, you should not say 30th of next month, within 30 days from the end of the month of deduction. The best way to remember is what you know. When will you follow the rule of 30th? For March, it's a universal rule. Whether TDS is of CD, Vakra of CP or anything. For March, it is always 30th. And what about IA, IB, M and S? Here, irrespective of the month, it's always 30th of the next month. Okay. See, actually, if you notice, IA, M and S, there is only single benefit. But in IB, there are two benefits. Tell me, why did I say like this? In IB, there are two benefits. That, see, I is rent. Rent you pay multiple times. So although you pay rent multiple times, TDS is multiple time or only one time? Only one time. That is a benefit. That benefit you could not see in IA, MNS, because IA, MNS are already one-time transactions. IA is what? Purchase of immovable property. It's anyways one-time transaction. So that one-time, multiple time relief doesn't suit in IA. In IB is rent. Rent is multiple times. But TDS multiple time or only one time? One time. Plus one more relief of 7th of next month, not applicable, 30th. See, I am just analyzing that in IB, I am getting double benefit. One benefit is instead of multiple TDS, it's only one time. And instead of 7th, it is 30th. But for IA, M and S, there is only single benefit, that you don't have to worry about 7th of next month. You deposit by 30th of next month. Okay. See, what is the status? See, don't lose the link. I am teaching when to deduct and when to deposit. It's still not over. Huh? In when to deduct, I had explained this, this and this. One thing is still remaining. Okay, can you see this arrow hanging here? This is remaining. And when to deposit, I have explained, totally explained. Nothing is pending in when to deposit. Depositing rule is crystal clear now. It's always 7th of next month, exception March and these 4 sections. Okay. One more thing. Wait. I will take you back to this example once again, because here there is one good point which comes in exam. Just recall this example once again, recently which we did. Tell me here, when did I deduct TDS in the month of March? Correct? And how did I calculate TDS? 2% of the rent of the whole year. Okay, that was 24,000, correct? Now, there is no rule in TDS. If the receiver does not give his PAN, payer will cut 20% TDS. Tell me, who deducts TDS? Payer. Like, see, if I make payment of rent, etc., so I am the payer, but the other party is receiver. So other party is supposed to furnish his PAN number to me. If he doesn't furnish his PAN number, I will deduct 20% TDS. You know why this 20% TDS punishment? Because without PAN, the whole TDS system fails. You know, when I deduct TDS, why do I need PAN? Because that TDS I will deposit with government. And deposit will go to whose accounts? That party's account. So if party's accounts PAN is not known to the government, how will government give the credit of TDS? Because see, I don't mind, I have to simply cut and give you the net amount, and TDS I will give it to government. But the TDS which I give it to government, you want the credit of that, but you will get the credit only if your PAN is known to the government. But some people do not understand all this. That's why to create a discipline in India, they have made a rule that if the other party fails to give the PAN, 20% TDS will be deducted. And another tension will be, for you it will be difficult to get the credit of TDS. Because see, I will deduct 20% deposit with government without PAN. Now, how will you track? How will government track this 20% was of Mr. Ramesh, Mr. Suresh, Mr. Iyer, Mr. Mishra? It is of whose party? Now, party will have to convince government that it is my TDS, it is deducted. So, that is another trouble. You can convince by showing TDS certificate, etc. But then, this acts as a punishment or not? So in short, if other party does not give the PAN, what is the rule? TDS will be 20%. So try this point in this example. Imagine I am making rent payment of 1 lakh every month. So I am the payer. But who is the receiver? Property owner. So property owner should give me his PAN number. But he did not give me his PAN. So what will I do? I will deduct TDS at the rate of 20%. See, in the month of March, I called him 10 times. Dear owner, please give me your PAN, please give me your PAN. He was not ready to give the PAN. And I cannot wait. I have to do TDS compliance in the month of March. So how will I do the compliance now? Based on 2% or 20%? 20%. Calculate 20% TDS. Rent of 12 months is what? 12 lakhs. 20% comes to 2,40,000. So TDS will be 2,40,000. Now tell me what will be the journal entry in the month of March. See, I am supposed to deduct TDS from March rent. But March rent itself is 1 lakh. So from 1 lakh, how do you expect I will cut 2,40,000? See, what you cut is something small compared to the base amount. Na? So here I am supposed to deduct TDS from rent of March. But rent of March is just 1 lakh. And 1 lakh can be cut to the extent of 1 lakh only. So in such case, you know what happens? TDS will be restricted to 1 lakh. Actual calculation gives me 2,40,000. But no point in 2,40,000 TDS. Huh? Because TDS operates how? I will have to deduct the rent of March. But rent of March itself is 1 lakh. And previous month's rent I have already paid. Na? In my hand right now only March month rent is there. And that I can cut at the most up to 1 lakh only. So TDS will be restricted to 1 lakh. So can you tell me the entry will be what then? Rent account debit 1 lakh. To parties account 0. To TDS payable 1 lakh. Full 1 lakh will go in the form of TDS. In fact, the TDS was 2,40,000. He is lucky that it is restricted to 1 lakh. This is written in the act. And you know, this should be written. Otherwise, the tenant will be in worry. He will think what? Rent of 1 lakh is there, but my TDS comes to 2,40,000. He will keep fighting with the owner. So that's why law said, don't worry. Sometimes if it happens that the amount of TDS is more than the payment amount, so restrict the TDS up to the payment amount. So I repeated this example, just wanted to show that sometimes you have to restrict the TDS amount to the amount of transaction. Then see here, look at this. Normally when to deduct TDS, which year is earlier? SWCL, actual payment. IB, again it's which year is earlier, but which year is earlier, every month or only last month? Only last month. Now, there is one special rule for online winnings. What is the section of online gaming? 194BA is the section for winnings from online games. You know, in online game what happens? Look, the person who plays online game, he has an account in the mobile. That is called user's account. And once you open the account, you have to deposit some amount and you keep playing. And in a day, he might be playing 100 games. Sometimes he's winning, sometimes losing, winning, losing, winning, losing. You know here how TDS operates? In a year, there can be say 1,000 games he has played. Some he has won, some he has lost. But do you agree it is possible that in 1 year, it is possible that you might have played 1,000 times? Because those who are addicted to gaming, they keep playing throughout the day. So tell me how to deduct TDS. In a year, if you play 1,000 games, if every game TDS will come, it will create a trouble. So you know what law says? No need to deduct TDS on every game. Only when the winner withdraws his money from the account. So you have to open an account with the gaming platform. You have to open an account, mobile I am showing because you play game through mobile. You have to open an account with the gaming platform. And your winnings and losing is credited, debited in your account only. But the moment you tell the platform, I want to withdraw my winning, only at that time they will deduct TDS. That means if I don't withdraw my winnings, I keep playing and I keep the winnings in my account only, then TDS will not come. TDS comes when? Only when I withdraw. So imagine I created one account and I keep playing, and suddenly in the month of September I felt in so many games I won a lot, I won in lakhs. Let me withdraw my winning. The moment I feel like withdrawing the winning, I will get full amount or net of TDS, net of TDS. So it is at the time of withdrawal. Okay, now answer. If a person says I will never withdraw only, I will keep the winnings in my account only, he is not withdrawing only, then in the end of the year TDS will come. See, if you think that I will never withdraw only, don't think TDS will never come. At the end of the year, government has to settle the account, because the income tax reporting is from year to year. No? So you may wish to keep your winnings in the account for 10 years, but government will do TDS operation at the end of the year. So see, what is the final rule? Look here. TDS will come at the end of the financial year, that is for sure. Or if you withdraw during the year, then it will come early, whichever is earlier. See, convince yourself with this formula. What does this formula say? That's what I explained. So see, government has made it clear. At the end of the financial year, we are going to deduct the TDS. Even if your winnings are lying in your account, TDS will come at the end of the financial year. But before the end of the year, during the year only if you withdraw, then on withdrawal TDS will come. In short, formula is what? At the end of the financial year means 31st March, or at the time when you actually withdraw your winnings from your account, whichever is earlier. So this is a special formula for 194BA. Tell me, on this day what is to be done? Gaming platform will create TDS liability. Tell me, it is whose job to deduct TDS here? Not the winner, not the gamer. Gaming platform will pass an entry of 2 TDS payable. But when? At the end of financial year or at the time of withdrawal, whichever is earlier. And when to deposit? Same. 7th of next month. And if it is March, then 30th April. See, rule of deposit is nothing special. Point is when to create liability in the books of gaming platform. When to create? Either when the year ends or before, at the time of withdrawal, whichever is earlier. Depositing rule is same. Okay. Now see, this online game has got one good example worth explaining. Try this. This type of question has already come in one past paper. See, it is interesting to know how TDS operates in online winnings. So see, I have given one example. Try this. First do one thing, take some time and go through the transaction which I have written here, and then I will start discussion. See, one thing I said, TDS will come when? At the time when the winnings are withdrawn, or if not withdrawn, then at the end of the financial year, whichever is earlier. Read this and then I will start discussion. You know, on this screen what I have displayed, this is the user's account, how it appears in real life. In case you are playing online games, see, I told you one lecture that online games are now banned in India. Playing for money is prohibited now in India, but in income tax law these provisions still exist. So we will study from exam point of view. Okay. So see, generally in gaming platforms, every person who plays game has an account like this. See, in my account, this is like a bank passbook. This is kind of a bank passbook thing. Only thing is, in bank passbook we have our bank account. This is account in gaming platform company. So see, your opening balance is 100. Then during the year you deposited 500 rupees. Why did you deposit? To play games you have to deposit the money. You cannot play games for free. You have to deposit. So you deposited. Already you had a balance of 100. You deposited 500. And then gaming company gave me bonus. You know, they encourage the gamers to play more and more. And since I am a regular gamer, they gave me a bonus. And this bonus is called referral bonus. Referral means maybe I have referred some of my friends to play that game on gaming platform. So I got some referral bonus of 200. Okay. And you know, W means what? It is withdrawable. W means withdrawable. Means what gaming platform says? This is a bonus given to you because you have referred 2 customers to us. So you will get a bonus, and this bonus, if you want, you can withdraw. W stands for it is withdrawable. And then there was one more bonus, that was joining bonus. Maybe when I joined, so joining bonus they gave me. How much? 300. But this is non-withdrawable. Here what company says, you know, that this bonus you are getting, it will remain in your account. You cannot withdraw. With this money you can play games, but you cannot withdraw. See, this happens in real life. Huh? So one bonus is withdrawable, other is non-withdrawable. And see, referral bonus, joining bonus, name of the bonus is not relevant. Don't pay attention to that. But pay attention to the fact that one bonus is withdrawable, other is not withdrawable. This information is useful at the end. I'll tell you how. Then what is 1000 rupees? I won in some games. So when I had the winnings, amount was credited in my account. Then 200 I lost in some games. Then one day I felt like withdrawing my winnings. So I withdrew how much? 1100. Then again there was a winning of 6000. Luck favored me. Okay. Then I deposited further 1000. I want to play more. I want to play more. Deposited 1000. And then I withdrew 4000. Then I lost 300. And this way the year got over. And at the end, what is the balance in my account? 3500. Okay. Now tell me how TDS will operate. Tell me, what did I say? TDS in online games comes as per this formula. What is the formula? At the end of the financial year or withdrawal, whichever is earlier. So see, I have already highlighted withdrawals and closing balance. Can you tell me why I have highlighted this? Because this is a trigger point of TDS. TDS is triggered when? Tell me, this TDS is triggered when? When you actually withdraw. So see, I have highlighted withdrawn. And even if you don't withdraw, when the financial year ends, TDS is triggered. So closing balance means end of financial year. So now tell me what is the amount of TDS. Calculate. Percentage, you know, 30%. And don't worry about the threshold. In online game, there is no threshold. Calculate. So see, generally what the student will do, since we have withdrawn 1100, TDS will be 30% of 1100. Wrong. TDS will not be 30% of 1100. From 1100, you will get deduction of this 100 and this 500. Because we assume that whatever you have withdrawn, of which 100 rupees opening balance you withdrew, and opening balance is already subject to TDS in the last year. See, gaming company at the end of the financial year, they deduct TDS. So last year at the end of the financial year, they might have deducted TDS. And last year's closing is current year's opening. So this 100 is already subject to TDS in the last year. And what about 500? This is not winning. This is my money only I am withdrawing. See, actually when you withdraw, you never know what exact amount you have withdrawn. See, what you withdraw is money. And on money, it's not written, it is this money or that money or which money. But law is presuming what? That whatever you withdraw, we will assume opening balance is withdrawn first. And then the deposits made by you is also withdrawn. This is a good rule for us. See, if government is greedy, what they will say? What you have withdrawn is your winnings only. Because they will prefer more TDS, but in the favor of assessee, they have made a good rule that don't worry, whatever you have withdrawn, we will assume opening balance has been withdrawn and deposit has been withdrawn. and these two things are not subject to TDS. Do you agree all other amounts are subject to TDS? Except 100 and 500, what are the other amounts? See these amounts. Tell me, in the remaining amount, 200 is what? Withdrawable bonus. Bonus is my winnings. It's income. 300 is not withdrawal, means that are not withdrawn also. Na? If something cannot be withdrawn, so it is definitely not there in the withdrawings. Drawings is something which can be withdrawn. Then what about 1000? Even that is winnings. See what I am trying to show. In my account, these are the credit balance, of which 100 and 500 cannot be subject to TDS. Why? 100 cannot be subject to TDS because already deducted in the last year. Deposit is my own money, it is not my income, cannot be subject to TDS. All other things can be subject to TDS. And even this cannot be subject to TDS. Which 300, not that is anyways not there in the withdrawals. So see, Act has made a formula only. See the formula. WOD means what? Amount withdrawn minus opening balance minus deposits made. This is the formula given by the Act. See, I didn't want to directly impose a formula. But if you see the law, they have given a formula only. W minus O minus D. What do you mean by W? Withdrawn. Amount withdrawn from your account. Minus O is opening balance. D for deposits. On this net amount, TDS will come. And you know, this loss also gets set off. See, the law says TDS is on net winnings. See, online game is a continuous account. You win, lose, win, lose, win, lose, win, lose, win, lose, win, lose. And you know, net winning, TDS will come. So TDS is on net winning, but TDS cannot come on 100 and 500. Huh? And if someone argues, but how can we say, sir, we have withdrawn 100? That is a presumption of the law. Law presumes that opening balance has been withdrawn, deposit amount has also been withdrawn. And those amount if withdrawn cannot be subject to TDS. Huh? So subtract it. So tell me, what, after subtraction, what do you get? 500. 30% TDS comes to whatever, that is a TDS. Then next trigger point. See, every time you withdraw, TDS will be triggered. So now tell me how TDS will come. See, now subsequent withdrawal, you know, at the time of each withdrawal, you will do cumulative working. See, actually, if you see, up till here the account is settled. Now focus only on this portion. That is your way of perceiving the things. Huh? But what law says, whenever you withdraw, we will go cumulative basis. And in case some TDS is already cut, you will get the benefit of that. Means now assume this 4000 and 1100 take cumulative basis. Cumulative, understand? Cumulative. So now take this working refreshed. Take it from the start. So tell me, as on 4000, what is my total withdrawals? 4000 plus previous withdrawal 1100. I know on previous withdrawal TDS has already been come, but that will adjust. Huh? But right now let's go cumulative basis. So what is the accumulated withdrawals? 5100. Okay. From that, this cannot be subject to TDS. This cannot be subject to TDS. Okay. So what is the amount? Calculate and tell me. 4000 plus 1100, how much? 5100. Of which you will subtract what? Opening balance of 100 and deposit of 5. Subtract and give me the figure. 5100 minus 600 is how much? 4500. 4500. But 500 is already subject to TDS. Now TDS will come on 4000. Okay, see here. Sorry, calculation mistake I did. I did calculation mistake. Sorry. Deposit, there is one more deposit here. See here. See once again, see. Total withdrawals is how much? 5100. That is total withdrawals. Then minus opening balance 100. Deposit 500 and there is one more deposit. See here, 1000 rupees. See this. WOD. What is D? Deposits. So there are further deposits of 1000, na? So that we missed. So now tell me, 5100 is total withdrawn amount minus opening balance 100 and then minus deposits 1500. It comes to 3500. And then something which has already been subject to TDS, adjusted. So on 3000 TDS will come now. Here also act as given the formula WODT. WODT. What is this T? Already taxed. So see, in the previous transaction, how much amount was already taxed? See, don't see the TDS amount. Amount on which TDS has been calculated. See, this is calculation of the amount. Percentage will apply later. So which amount has already been subjected to TDS? 500. So this you have to subtract. See why we sub? Because we are doing the working on cumulative basis. Now next, last point is challenging. The year has ended. So now when the year ends, even if you are not withdrawn, at the end of financial year TDS will be triggered. So tell me how TDS will come now. See, in closing balance, you know what you should assume? Even this is withdrawn. See, closing balance is there in my account. I don't want to withdraw. I will withdraw after 20 years. So that's my wish, huh? But income tax department wants to settle the account year to year. So income tax will assume what? This 3500 is withdrawn by me. So tell me now, what is my total withdrawal? 1100 withdrawn. 4000 withdrawn, cumulative, and 3500 although not withdrawn but deemed to be withdrawn. But wait, tell me, can I withdraw 3500 if I really want? See, closing balance means it is there in my account. But let's assume I said I want to withdraw. Can I withdraw 3500? I cannot, because there is some non-withdrawable amount here. In my running account, there is some non-withdrawable 300. So tell me, even if I wish to withdraw my closing balance, do you think it's possible to withdraw full 3500? What gaming platform will do? They will say, dear, 3500 has got some 300 which is a non-withdrawable bonus. So not withdrawal means it is not withdrawable only. So how can you wish to withdraw? So tell me, in closing balance, how much is withdrawable? If you subtract 300, only 3200 is withdrawable. See, when the year is ending, we are assuming even that is withdrawn. But what can be assumed to be withdrawn is what is withdrawable, na? Something which is not withdrawable, how can you assume it's withdrawn? So tell me, 1100 are actually withdrawn, 4000 also actually withdrawn. Closing balance, assume it's withdrawn. But if I withdraw, I cannot withdraw full closing balance, huh? Because there is some non-withdrawable amount. So what is withdrawable closing balance? 3200. So add all. Add fast. 1100 plus this 4000 plus how much is withdrawable closing balance? 3200. Mind you, 3200. So what is the total? 8300. From that you subtract opening balance. Keep calculating. 8300 minus 100. 8200 minus deposit. 2 times I made deposit. 500 and 1000. And then how much is already subject to TDS? How much is already subject to TDS? 500 at the time of first withdrawal, 3000 at the time of second withdrawal. Already subject to TDS will be subtracted so that there is no double TDS. So see, I have done a working here. Just check. What is 5100? Actual withdrawals during the year, actual withdrawal. And what is 3200? Look at this. Withdrawable closing balance. Which closing balance? Withdrawable closing balance, because withdrawable can be assumed to be withdrawn. Then opening is 100 and 1500 is what? Deposits made by me. It is my own money. It is not having the character of income. It's my money. And what is 3500? Amount which has already suffered TDS in the previous withdrawals. So see, here also there is a formula. WCO DT. You know how I pronounce this C? WOD, WODT, WACO-DT. What did I say? WOD, then WODT, WACO-DT. This way you have to remember. Because see, right now I can explain detailed concept, but later on, sometimes you might forget the concept. So this formula you have to remember. And see, even in the act, they have given mechanical formula. If you see the law, they have given this direct formulas only. But I prefer to explain the concept. But actually, you have to show the formula only in the exam. So tell me, what is the formula for first withdrawal? OD. Subsequent withdrawal, ODT. At the end of the year, WACO-DT. This is the best to remember. OD, ODT, our subject DT, OD, ODT, WACO-DT. And what is the full form? In O, what is W? Withdrawal. And every time W means accumulative, cumulative withdrawal. O means opening balance, D means deposits. And in ODT, what is T? Already subject to TDS. Not the TDS amount, base amount which is already subject to TDS. Like this 500. Then in WACO-DT, what is C? Closing balance which is withdrawable. Okay, withdrawable closing balance. See, when you take closing balance, you take only withdrawable. Opening balance should also be withdrawable. See, tell me, in this example, what did I do? From 1100, I subtracted 100. Why? Because last year TDS has already been deducted. But last year also TDS was deducted only on withdrawable balance. Only on withdrawable. So just as see, right now in my closing balance, did I take entire closing balance or withdrawable? Withdrawable. So whenever you take the opening balance also, the rule will remain the same, na? So see, in all my working, opening and closing balance should be full opening, closing or withdrawable. Withdrawable. See, in our opening balance, nothing was given, so we assume it was withdrawable opening balance. Already subject to TDS in the last year, so we subtracted. But in closing balance, we know na, there is one 300 amount which is not withdrawable. So if I want to know the withdrawable closing balance, I will subtract 300. Okay. So this is a special rule for online games. See, this kind of question has already come in one paper. They had given one question of Dream 11. Your Dream 11 is also one app where you do betting on cricket matches. Okay. But nowadays these things are prohibited by Government of India. But in exam, if it comes, it can come like this. My gut feeling says in exam they will not put a question on this. Although as a teacher I have to fulfill the duty of teaching you. But if a paper setter is rational, the thing which is banned in India, they should not create a question also on that. Na? But if by chance if it comes, you have to solve like this. And I have created one exhaustive example. In past paper when it had come, only few things were given out of this thing. Hardly few things were there. I have made purposely a detailed example so that every possibility is covered. This is actually a very detailed example. Huh? In actual exam question in the past paper, it was very small. If you see some past paper, you will see it was a very small question. So see, finally, what we have done? When to deduct, when to deposit is done. When to deduct, this is the summary. But this I took more in detail. OD, ODT, WACO-DT, okay. And then this also I have finished. So 2 points we have done, when to deduct TDS and when to deposit TDS, okay. Okay, then see here. in general notes, the next point is failure. Failure in relation to what? In deducting and depositing TDS, if you do some failure, what are the consequences of that? Tell me right now, what did I say? When you are supposed to deduct TDS, I told you. Part is on credit, actual payment basis earlier, sometimes actual payment basis. Depositing rule also we have studied, 7th of next month, sometimes 30th of next month. Now, if you don't follow this rule, which I explained just now, what are the consequences of that? That is the meaning of failure. So, see here, there can be two types of failure. Some people don't deduct TDS. Some people they deduct but they don't deposit. Like see, for example, some people don't deduct TDS means what? Imagine there was a winnings of 100 rupees. If there is a winnings of 100 rupees, what is my duty? Out of 100, I should cut 30 and I should pay 70 to the winner. But some people, what they do? They give full 100 to the winner. Giving full 100 to the winner instead of 70, giving full 100 is what? You didn't deduct TDS. You gave entire 100 to the winner. This is one. Other case is what? This guy, out of 100 winnings, he gave 70 to the winner. 30 he has kept in his pocket, he is not depositing. So tell me, who is a big criminal? This guy is a big criminal. He has done worse. If he has done bad, he has done worse. Because here what he is doing? To the winner he is giving only 70. Assume winnings is 100. To the winner he is giving 70. And 30 rupees which is cut, he has kept in the pocket and he is not ready to deposit. That means you are a thief. You have stolen government's money. You are kept in the pocket. So this guy is a big criminal. But here sometimes there is innocence also. What innocence? Like I was not aware of TDS provision. By mistake I gave full 100 to the winner. But giving full 100 to the winner is not that criminal, no? Because at least I am not keeping the money in my pocket. I gave all the amount to the winner. That's also wrong. It's not pardonable. But then it's not that grave. So that's why see, such people will have small punishment. And such people will have big punishment. Basically, first I wanted to convince that this is a big criminal. Because he has given the party 70, 30 rupees is keeping in his pocket. He is not ready to give government. So you will get a big punishment. And what is a big punishment? See. Here if government levies interest of 1%, here it will be 1.5%. The rate of interest is higher. How interest will be calculated? Don't go into the calculation zone right now. I will show you the explanation of the calculation. Right now we just feel the difference. Interest is higher if you fail in deposit. It's 1.5%. Then one more punishment. If this person suffers penalty, this person will go to jail. Who will go to jail? The one who is not depositing. See, going to jail, don't worry. These things are written in the law. But action is taken only in extreme cases. But if you see in the law, they have written that if you don't deposit TDS, like that person, he is giving to the winner 70. 30 rupees he has kept in the pocket and is not ready to give to the government. I will not give, I will not deposit. So he will be put behind the bars. Means in extreme case this will happen. Obviously, in once or twice, one or two event, government will not immediately react. But if such things are repeatedly happening from one assessee, then government will not leave him, government will send him behind the bars. And once you are going to jail, it's called prosecution. And you know how much jail? Minimum 3 months to maximum 7 years jail imprisonment. This is called prosecution under section 276B. But this guy may be innocent. Here what happened in my example, tell me. I gave to the winner full 100. But at least I didn't keep anything in my pocket. Na? I gave full 100 to the winner. So what penalty I will suffer? 30 rupees which I failed to deduct, I will have to give from my pocket. Amount of penalty is the amount of TDS. I want to explain the amount of penalty. What is the amount of penalty? TDS amount which I failed to cut, I will have to give from my pocket. So tell me, what is the total cash outflow for me? To the winner I gave 100, by mistake 100, which I should have given 70, but I gave full 100, means I didn't deduct TDS. So 100 went to the winner. Now when government comes to know about this mistake, what will they say? Shirish, you pay 30 from your pocket. So I will have to pay 30. So what is my total outflow? 100 to the winner, 30 from my pocket, 130. If I would have followed the rule honestly, what I should have spent? Only 100. 70 to the winner, 30 to the government. But I made a mistake of giving full 100 to the winner. So 100 went to the winner, 30 will go from my pocket. So my total expenditure is 130. And even winner will pay tax to the government. He got full winnings. So government will get 230s. 130 from the winner, because he has to pay the tax on the winnings. If TDS not cut, he has to pay from his pocket. Na? So 30 rupees tax will be paid by the winner. And what I am paying 30 is penalty. In short, government is getting 60 rupees. How? 100 rupees winner, he has to pay the tax. That's the basic tax of 30. And for my mistake, I have to pay penalty of 30. So government has eventually got 60 rupees. 30 tax, 30 penalty. Okay. In short, tell me, who is suffering more? This guy. If you give 70 rupees to the winner and you keep 30 with you, interest will be at the rate of 1.5 and you may have to go to jail. See, whenever in my communication, if I talk about penalty or prosecution, you should not be scared so much. For penalty prosecution, there is one standard dialogue. Look, penalty prosecution may or may not be levied. Even if levied, you can have genuine reason to get excused. Means these things are not that serious. In extreme cases, people have suffered also. But in general, what I am trying to say, penalty prosecution may or may not be levied. It depends upon assessing officer. He can let go also. And even if he levies, if you request him, if you show some genuine reason for your fault, they can waive also. But interest can never be waived. It is mandatory. The nature of interest is always mandatory. Penalty prosecution may or may not be levied, but interest is mandatory. From exam point of view also, interest calculation is important. They have already put a star. See, penalty prosecution I have to teach my students, but generally tested less in exam. Interest is tested more because the nature of interest is also mandatory. Na? So as a student of CA, you should know how interest working is done. So I'll do one thing. I will take two examples now. One example to explain 1.5% working. Then one more example to explain 1% working. See, penalty prosecution explanation is done. Here I don't have to explain further. But interest calculation I have to explain. Na? So see, I have kept two examples ready. One example is on late deposit, means fault in deposit, late deposit. So I will explain 1.5 working. Then this is example 1. Then see, I am sliding the page. Second example is on late deduction. Means you failed in deducting. You deducted but late. So first example on 1.5, then on 1. Try this example. Try. See, I want to create an example where I deducted properly, but I deposited late. Means I want to create a failure in deposit. So see the example. Same example of rent which I gave some time back. Assume on 3rd June rent was due, but I kept the rent outstanding. So outstanding means party's account is credited. Payment will be done in future. But what is the rule in TDS? Party's account credited, actual payment which is earlier. So what comes which is earlier? Party's account credited comes which is earlier. So on 3rd June I have to create TDS liability in my books. So I have done it. See, rent account debit 100, to party's account 90 and TDS payable 10. I did on 3rd June. That means deducted perfectly on time. Perfectly on time. Now tell me, when should I deposit this TDS? 7th of next month, taking June as the base. So what is 7th of next month? 7th of July. So by 7th of July, what I should do? This TDS payable should be paid. So entry will be TDS payable to bank. Means I should deposit by 7th July. But I made a mistake here. See what I did? I did not deposit by 7th of July. See, when did I deposit? 25th September. This is called, please answer. This is called late deposit. To calculate the interest. Tell me, interest will be at the rate of 1% or 1.5%? 1.5%. Because there is a fault in depositing. Deduction was done on time. Liability was perfectly created on 3rd June. To calculate interest. Percentage you know 1.5. But this percentage you will apply on what? Rent amount or TDS amount? TDS. Why will you calculate interest on rent? Fault is on TDS. So what is the TDS amount? TDS amount is 10 rupees. Rate of interest 1.5% is per month. Into how many months you will take? What is the rule for months? You know, part of the month should be treated as full month. So see, generally what a student does, you know, look. Do you understand that we have to calculate the months now? What a student does, you know, that I should have deposited by 7th of July. But I deposited on 25th September. So the delay is, what I should have done on 7th July, I did on 25th September. So they count from July. Part of the month, full month. Although exact date was 7th of July. But once you delay beyond 7th, the whole month is counted. July, August, September. So generally student will count 3 months. But that's wrong. Interest will not start from July. It will start from June itself. Although I was required to deposit by 7th of July. But if I don't deposit by 7th of July, interest will not commence after July. It will commence from June only. Why? Because see, my liability was created on which date? You understand the meaning of TDS payable? Payable means what? It is payable. And when it is payable? 3rd June. So imagine from government's point of view, what was payable on 3rd June? You paid on 25th September. You made us suffer for 4 months. From 3rd June, we are desperately waiting. See, payable means what? It was a duty to pay on 3rd June. It was the greatness of the government that government gave you the time till 7th of July. If by 7th of July you make the payment, they will not levy interest. But that is the greatness of the government you should feel grateful for. Otherwise, government's demand started from 3rd June. Because see, the journal entry says what? TDS payable. That means it became payable on 3rd June. But feel grateful that government was not so desperate. They said, okay, by 7th July also you pay. It's okay. But did you pay by 7th July? So why okay now? If government gets angry, they will charge interest right from the scratch. From 3rd June. So see, the working will be like this. Look at this. From 3rd June to 25th September. How many months it comes to? 4 months. See, part of the month is full month. So 3rd June, 3rd, 4th, 5th is not even. June is counted. June, July, August, September. 4 months. So finally the calculation will be like this. Amount of TDS 10. Rate of interest 1.5%. Months 4 months. Because the rate is per month, so into 4 months. And this is interest under which section? I had the section 201 1A in the exam. Many times they directly write the section number in the paper. Please buy this section. 201 1A is the section for interest. Okay. You know, in the act they have given a formula for months also. Can you create a formula for 4 months? See, in my example it's 4 months. Will you buy it 4 months, 4 months, 4 months? In my example, it's 4 months. It could have been 6, 7, anything, na? If I change the example. So can you make a formula for 4 months? Period starting from the date when TDS was deducted up to the date when deposited. Convinced with the language. 3rd June is the date when TDS was deducted. Deducted means creating liability. So when was the liability created? 3rd June. Up to the date when you actually discharge your liability. Here I have written the formula. Read this. Read. Period starting from the date when TDS was deducted means 3rd June up to the date when deposited 25th September. Now, one more example I will take to explain 1%. This is really good example. Just pay attention. One more example for 1%. See this. What is the title of the example? Example for late deduction. Means here what fault I will do? I will not create the liability in my books on time. What do you mean by deducting TDS? Creating liability. So now I will create the liability late. So see, same example. 3rd June the rent was due. Entry is rent account debit. And since it was outstanding, I have written to parties account. So tell me, ideally when you should deduct TDS? Parties account credited, actual payment whichever is earlier. Actual payment will happen late. So what comes early? Parties account credited. And if it is 3rd June, so I should pass the entry like 2 TDS payable. In my entry, what should come? 2 TDS payable. And Mr. R, I should not credit with 100. I should credit with 90. I should have done like that, but I didn't do. How my entry was? Rent account debit to Mr. R. This is a sign of TDS not deducted. See, not creating the liability of TDS is a sign of not deducting TDS. Agreed? Now, how will government come to know about this mistake of mine? See, there is what mistake I did? I have not written to TDS payable in the journal entry, na? But my journal entry is in my books. My books are in my custody. How will government come to know? Are you understanding? It's very difficult for the government to track this. Because see, I am openly telling you what entry I passed. Because I am discussing with you, na? But imagine if this thing happens in real life, how income tax people will come to know that my journal entry is wrongly passed? So for this they do survey. You forgot the time spent by me with you. There was a topic of survey done. In survey, I told you there is a special survey, TDS survey. So, in survey, what government will do? They will suddenly give a surprise visit in my office. So, imagine this is the entry in my books and suddenly income tax officer drops in my office. And they will say, Shirish Vyas, stop the lectures. Show me your books of accounts. I will have to give them books right away. And they will go through the books and they saw this entry. Then I am caught. Means how they will catch me? By surprise survey. One topic of survey I did, if you remember, TDS survey was under section 133A, subsection 2A. So survey is a surprise visit only. Because see, if there is no surprise visit, how will they come to know? My books are with me in my custody. How will they come to know I made a mistake? So this they come to know in survey. So let's assume, look, let me continue this example. In June, I passed a wrong entry. In the month of August, listen to my month, in the month of August, income tax officer came to my classes and they came to know I made a mistake. I said, sorry. They scolded me. Shirish, you are teaching TDS and what you are doing in TDS in your books? What the hell do you teach your students? He scolded me also. I said, sorry. And you know what I was doing? I was trying to change this journal entry. He slapped me. We are in the month of August. You are changing the entry of June. Backdated. I cannot do that. So tell me, how should I correct my mistake? In August only, our account will be debited by 10 and 2 TDS payable. I will have to pass a fresh entry now. See, this I did in the month of, look, 23rd August. Assume 23rd August was the date of survey. See, why I am creating atmosphere of survey, because only if survey is there, I will be caught. Imagine if survey was not there, and if I realize my mistake later, oh my God, what blunder I did. So I can go to 3rd June date and I can change the entry. See, if no one comes to know, even in the month of December, I can change the transactions of June, May. But what happened in my case, it was my bad luck that income tax officer suddenly gave a surprise visit in the month of August. And in front of them, I cannot go to backdated entry. Okay. So I will have to pass the entry like this. Are you understanding the entry? R account debit to TDS payable. So this means what, TDS liability is created. Means TDS is deducted, but on time or late. Late deduction. What should have happened on 3rd June happened on 23rd August. So there is late deduction. Tell me, when should I deposit this now? If I created a liability in August, I should deposit by 7th September. Still, what law says whether you create the liability on time or you create late, make sure you deposit by 7th of next month. So here I created a liability in August, so I have to deposit by 7th September. But again, here also I made mistake. I should have deposited by 7th September. See when I deposited. 13th October. See, purposely I am making more defaults so that I can explain the example exhaustively. So tell me, when was TDS deducted and when was deposited? Deducted also late. Deposit also late. Tell me why I am calling deposit also late. Because August TDS I should have deposited by 7th September, but I did on 13th October. So now tell me what is the consequence of this. Same thing can come in exam, trust me. Only thing is in exam they will not pass journal entry. This thing will be given in a paragraph form. And they will ask calculate. What they will ask? Calculate interest under section 201 in bracket 1A. That will be the question. Try. See, first I will calculate interest for late deduction. From year to year, I have to pay 1% interest. Because from June to August, what is my fault? I didn't deduct TDS. I delayed in creating the liability. I should have created a liability on 3rd June, but I did it in August. So this is called late deduction. So do you agree this period is called late in deduction? And tell me, here the delay is called what? Late deposit. So now you can calculate the interest. What is the interest for late deduction? 1%. Late deposit 1.5%. Calculate. Do you agree with what I have written here? Late deduction, late deposit. This is the period of late deduction. So tell me, late deduction interest will be how much? TDS amount is how much? 10 into rate of interest 1% per month into period is what? From 3rd June to 23rd August. What is the period? Part of the month, full month. June, July, August. 3 months. So 3 months interest. This is called interest for late deduction. Keep late deposit aside, because it has a different rate of interest. Okay. See the calculation. 10 into 1% per month into 3 months, that is June to August. Okay. See, in the act, they have given a formula. 1% will be starting from the period when the TDS was deductible up to the date when deducted. You understand this English? Date when it was deductible up to the date when deducted. So tell me when it was deductible? 3rd June. When you were deducted? 23rd August. See, I have written also. Look here. The date when it was deductible up to the date when deducted. That is 3rd June to 23rd August. Now tell me, what will be the interest for late deposit? So here we have made late deposit. Why I am saying late deposit? Because August TDS I should have deposited by 7th September, but I did on 13th October. So late deposit. What is the rate of interest for late deposit? 1.5%. But for how many months? See, what is the rule? Date when deducted up to the date when deposited. Apply the formula. When did I deduct? 23rd August. When did I deposit? See, we don't count the period after 7th, na? That I already made clear in the previous example. Although I am supposed to deposit by 7th, but interest do not commence after 7. It commences from the beginning, na? So here also, although I was supposed to deposit by 7th September, but interest doesn't commence from September. We have already made a formula, na? Date when deducted up to the date when deposited. So tell me accordingly, from August to October, how many months are there? Count. August, September, October, 3 months. See the working. See. 10 TDS 1.5% into 3 months. What are the 3 months? August, September, October. But here there is some glitch. Are you noticing one glitch here? August month is calculated twice. Feel the month of August. Feel. Means in my 1% calculation also August has come. And 1.5% calculation August has come. So that means eventually what has happened? August has suffered 1% also. August has suffered 1.5% also. So August has suffered 2.5% interest. Which is unfair. How it can be possible? So that's why month of August you have to skip in the working below. See this. It will not be taken as 3 months. Your interest will come only for 2 months. And why I am giving preference to August in the first calculation? Because see, there is a process. First you deduct, then you deposit. The first fault is of deducting. Depositing is the next fault. So August should be called faulty in the first default. See, there is a sequence. First you deduct, then you deposit. Depositing is the second activity. It gets the second preference. So that's why August is not taken in late deposit. It is counted in late deduction. So what is the right answer? Above interest will come for 3 months and this will come for 2 months only. Long back in ICA study material, they counted August twice. And I used to teach my students that, see, study material is done like that, but I feel it's not logical. According to me, August should be counted only once. And there was a difference in my explanation and study material. But luckily, study material is revised now. The study material which you have, it is updated. In the new study material, they have ignored August. They have not taken August twice. If you see, there is one question also in the study material of this kind. There they have not counted August twice. Now study material of ICA is matching with my explanation. But why this problem is happening? Problem is not of ICA or someone. Problem is in the wordings of the law. See, the wordings of the law says what? Read this. For 1%, what is the wording? Tell me the wording for the period. Date when deductible up to the date when deducted. And part of the month is full month. So deducted month is counted here. Then again see here. Date when deducted up to deposited. In deducted month, see, I have done yellow also. Deducted month is counted twice. Accordingly, in our example also, see, from June to August and from August to October. So August is counted twice. So that's why there is a glitch in the law. Means if you do it in real life, sometimes income tax officer will be so shrewd, he will say August will be counted twice. Because these people don't see the logic. They go as per the bare act. And in the act they have written for 1% deductible to deducted. So they will count August. And for 1.5% deducted to deposit, they will count August there also. In real life it can happen like that. But anyways, we are answerable in real life or in exam. exam, and for exam ICAI study material matters. So they are following which approach? Ignore August, don't count twice. So we are reconciling with ICAI approach. Okay. So this point I finished, that if you don't respect the rule of deducting and depositing TDS, you have to suffer interest, penalty and prosecution. Okay. So this was point number 3. See, we are doing general notes. General notes. In general notes we have done till point number 3. Okay. Now see, I will stop here. I will give you some homework of up till now whatever we have done, and this portion will finish in the next lecture. Now see, in the remaining portion, till here only most important things are there, and even this 40A is little important. Rest all things will get over very fast. This will definitely get over in the next lecture. Definitely it will get over. Okay. Till here the explanation was detailed, which we have done. Okay.